we're getting this momentum across the Atlantic and from all segments, be it contemporary, be it premium, be it luxury. We're really seeing strength in what we have to offer, which candidly, it isn't surprising to us because, first of all, as we've talked about before, we are an incredible value. So even though we've been successful in really pushing on that demand and getting our pricing up, we are still an incredible value versus alternatives. And not only are we an incredible value when you look at our alternatives, the service levels that we provide are unmatched. And they're just as good as they were from before the pandemic, which is not something that a lot of hospitality outfits can say.
I'm wondering about the trends that you're seeing when it comes to onboard spending, excursions. Are there any signs of lower spending once consumers are on board, or are there any signs of weakness that you're seeing anywhere, Josh?
Excuse me, no, not particularly. You know, in the second quarter, our onboards were up about 4% per diems year over year, and as you know, last year was up incredibly over the pre-pandemic period. So, you know, the trends that we look at to understand the strength of our consumer, we've got the results, we've got the onboard spending in real time, we got the bookings, and all of those metrics for us are telling us that our consumers are incredibly strong. We've got incredibly strong brands that really resonate with the segments that we're going after. And people are absolutely still willing to spend on experiences. And that is exactly what we offer. Great experiences, we create memories and happiness for a lifetime.
Hey, Josh, one of the numbers that struck me too is your total customer deposits reached an all-time high of $8.3 billion. That surpassed the previous record by over $1 billion, $1.1 billion to be exact. Does all of that turn into revenue that shows up ultimately on the balance sheet? In other words, are there cancellations that can happen? What do you see around that?
Yeah, there are cancellations that can happen, but the vast majority of that is going to come through ultimately in revenues. So that's a bit of a forward indicator of how we're doing. And that increase is really a combination of increased pricing, us elongating the booking curve, so taking bookings even farther out than we had even just a year ago. And, you know, we're doing a better job of bundling our offerings so that people can spend in advance of the cruise, not just for the ticket price, but certain onboard experiences. So it's a combination of those things that we've been very focused on that are attributing to that increase in customer.
Well, that's something we've talked about, right? All of the bundling that happens before they even step on a ship, and that ultimately can lead to more spending. Because that thinking of, I've already paid for everything, right? You get on ship and you're like, wait, I can still spend. Like, that really works.
It does really work. It does really work. I mean, it's a good amount of time that goes between the initial purchase impulse and then getting on board. So having what we refer to as a second wallet available is real. And actually, folks who buy something of onboard spending before they get on the ship, they spend more on board than those who don't do anything in advance. So it's a very strong opportunity for us.
Okay, Josh, I'm wondering about pricing pressures that you may be facing at the company. You're talking about consumers who are out there spending. That's certainly strong. What about what you have pressure, where you have pressure? Food prices, labor costs, fuel costs. What are you seeing on that front?
Yeah, you know, I mean, the good news is there's been the deceleration of inflation. We don't see disinflation, but we certainly see a deceleration, which is encouraging. I think if you look at our P&L, you'll see on the crew and labor side, our teams are doing a real good job of trying to be mindful of the P&L and certainly pay a good living to people, but doing so efficiently. The biggest thing that we see as a change from pre-pandemic times to now is probably, you know, that combination of two of the things that you said, food and fuel. Those are inherently more expensive, and we're doing our best because those are always going to be inputs into our business. We are laser focused on reducing consumption because no matter what the price is, if we use less, we will be better off. And so I'll give you two examples. On the food side, we are looking every which way we can to cut the amount of food we put on board, cut consumption, to be more mindful of the fact that we've got a lot of food waste in any given year. We've actually, because we put this focus onto it, we've been able to cut our food waste by over 40% per person per day versus where we were before the pandemic. And that is because we are giving so much thought to reducing the whole consumption cycle while still giving guests everything they want, but just being more thoughtful about how we do that. And on the fuel side, not only is it good for the environment, it's good for the bottom line. And even though we are over 30%
NYMEX
bigger
diesel
today
July
than we
futures
were in
settle at
2011, we
$2.53 a
actually
gallon.
consume
NYMEX gasoline
10%
July
less
futures settle at
absolute fuel
$2.54 a
than we
gallon.
did back in
NYMEX natural gas
2011, and
July
we emit
futures settle at
over 10% less
$2.62.
absolute terms greenhouse gas emissions than we did back in
NYMEX
2011.
WTI
So
crude
by being
August
laser
futures settle
focused
at
on that, not just looking to,
$80.90 a barrel. That's
we'll always
up
say this,
7
we
cents or
can make a huge impact on our
0.09%.
bottom line.
Hey, speaking of being laser focused, you guys still have, I think, roughly, I was looking at the Bloomberg, maybe around 30 billion of debt still on your balance sheet. I think 4.1 billion maturing by year end. How might the bookings and the outperformance there maybe power help with debt reduction? Like, what's your plans on that?
Yeah, absolutely. That is, when it comes to our capital structure, priority one, 2, and 3 is reducing that debt balance. We've actually reduced it by $8 billion versus our peak, which is great. I predict we probably got another billion or so to go as we get through the remainder of this year. That should get us to leverage metrics heading towards about 4.5 turns, which is a big inroads versus where we were just a couple of years ago. Now, what we see as a plan going forward is, in addition to the fact that our increased EBITDA and better business is going to help our metrics and help the shape of our balance sheet, we have intentionally reduced our supply growth, our pipeline of new builds in the medium term. And so we're looking at a profile with only one new build coming in 2025, none in 26, and then one in each of 27 and 28. What that does is it will allow us to take billions of dollars of free cash flow each year for the next several years to pay down debt. And that's exactly where we're focused. I was a treasurer for 10 years, and we were an A- company. I know the power of having a fortress balance sheet.
Hey, Josh, I don't want to belabor the point here, but we're hearing over and over again from people not like you that they're starting to see some cracks form in the consumer. We're seeing some price wars happening in fast food right now. For example, are you seeing weakness anywhere in your business or anywhere in the consumers that you deal with?
At a general level, no, we're not. We see the demand profile is incredibly high. And I attribute that not just to the value gap, not just that we're getting better at what we're doing, but if you think about it, you just put yourself in the minds of a consumer. If they are stretched, if they are looking to figure out, how do I make my vacation dollar go further? That is playing into what we have to offer because we are bottom line, we're a cheaper alternative than lots of other things that they can choose to do. And they're seeing the value of that. They have friends, they have family who have taken holidays with us, and they can champion us on our behalf.
Josh, so appreciate it. Have a great summer. Josh Weinstein, he's president and CEO of Carnival Corporation, joining us there from their headquarters in Miami.
Hey, let's go to Washington, D.C. now for a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
Hi, Tim. The U.S. Supreme Court is poised to allow abortions in medical emergencies in Idaho. That's according to a copy of the opinion that was briefly posted on the court's website. Michigan Attorney General Dana Nessel was talking about that ruling that was obtained by Bloomberg Law.
We've seen this exponential rise in both maternal mortality as well as infant mortality ever since the Dobbs decision came out. And hopefully, if this is a real ruling from the court, it will do something to curtail the number of deaths we've seen.
Dana Nessel was speaking with Bloomberg's Joe Matthew and Kaylee Lines. Now, the decision would reinstate a lower court order that ensured hospitals in the state could perform emergency abortions to protect the health of the mother. The Supreme Court's press office says the opinion in the case had not been officially released. The Supreme Court has also rejected a challenge to the Biden administration's efforts to push social media companies to remove content believed to be disinformation. They didn't rule on the merits. Rather, the justices said the plaintiffs didn't have standing in the case. The court also pared back a public corruption law, saying that state and local officials who accept gratuities are not covered by a federal bribery statute. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife and I. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are churning in the final stretch of a strong quarter that has seen a small group of high-flying shares lead the way. S&P now down 3, drop there of 0.1%. NASDAQ 100 index just turning negative, down 1 point, little change there. While NASDAQ is up 35, a gain right now of 0.2%. The Dow up 0.1%, higher right now by 33 points. 10-year 4.31%, the 2-year 4.74%. Gold down $19 the ounce, 2,300 even on spot gold. Drop now of 0.8%. The West Texas Intermediate crude up 7 cents a barrel, 80.90 right now, a gain of 0.1%. Rivian Automotive shares up 21% as Volkswagen plows $5 billion into a tie-up with Rivian, which is the closest would-be rival to Tesla. We've got Tesla shares trading a little, actually up 4.5% right now, 195.90 on Tesla. Lucid moving higher by 5.2%. Volkswagen, the ADRs down 1.7%. Again, recapping, S&P down 4, down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, he is the wealthiest person in the world, depending on the day. But, I mean, come on. He has spent some 4 decades building up the House of Arnault and the clothes and accessories that signify status among the global elite. You know brands that include, of course, Louis Vuitton, Christian Dior, Bulgari. I'm going to hope I'm saying it right.
You wrote it, you read it.
Celine, Fendi, Tiffany, and more. He's not done. Let's get to the new monthly issue of Bloomberg Business Week. We welcome in the editor, Brad Stone, author of Amazon Unbound and the Everything Store. He, too, along with Bloomberg's Angelina Rasquette, wrote the cover story that is now available on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. Brad, we have talked about, been looking forward to this new redesign of Bloomberg Business Week. But for those who maybe aren't in the know yet, remind us about the redesign from the ground up.
Yeah, sure, Carol. So Business Week is now a monthly magazine, right? That's perhaps unusual, but it's a 100-year-old brand that stands for examining the biggest companies and names in business. And we continue the tradition every day on Bloomberg.com and now in the monthly magazine. This is a magazine that I think will surprise a lot of people. It looks different. It feels different. It's thicker. And our mission is to put a critical, significant force in business or tech or politics or economics on the cover every single month. And as you say, this month it's Bernard Arnault. I did not know a lot about him before starting this journey, but as you say, one of the wealthiest people in the world, $210 billion, has fallen a bit since the French parliamentary elections.
Right.
I think he'll be just fine. But he's now the 3rd wealthiest person in the world, and I think not very well understood.
Well, it's interesting that you mention elections because politics actually plays a big part in his origin story. So just sort of get into that a little bit.
It's interesting. He grew up in the north of France. His father ran their family's manufacturing business, had a small real estate component. He, highly accomplished, went to the best engineering school in France, joined the family business, got his father to reorient towards real estate, moved to the U.S. after the left won the French elections in I think the late 70s or early 80s. You're testing my knowledge here of French history, and really didn't do so well in the U.S., but woke up to the possibility of these small little luxury houses, often family owned, Christian Dior, Louis Vuitton, that weren't really being run as businesses, but were being more run as kind of cultural artifacts. And he was very opportunistic. He bought the company that owned Christian Dior out of bankruptcy in the early 80s.
And Brent crude futures settle at $85.25 a barrel. That's up 24 cents or 0.28%.
And assembling this huge empire.
Great story, though. I mean, Tim and I have been talking about this offline about Christian Dior and a New York cab driver. Can you tell us a little bit about that helped him kind of think about,
well,
right?
He tells the story, and it has moved into mythology or legend.
Lore,
but
right?
Apparently, when he was a college student in the U.S., he asked a cab driver at JFK, "Do you know the name of the French president?" And the cab driver did not know, but knew the name Christian Dior. And that, he says, sort of awakened him to the cultural resonance of these brands. And when we think about names like Louis Vuitton, Bulgari, Hennessy, Tiffany, which they recently acquired, it is interesting. I mean, these are brands that have done extraordinarily well in China. In a way that the Chinese luxury brands have never been able to do. And he's tapped into something that I think is true about this lifestyle and European tradition.
Well, I want to go to China now because when he went to China in the early 90s, he tells a story of what he saw there. It's a far cry from anyone who's been to one of the mega cities in China in this day and age and seen one of the businesses that the company owns, perhaps on the famous street in Shanghai where all the luxury brands are. What did he see in China in the early 90s that gave him an indication that this is going to be a killer market?
Right. Well, we asked him about that, and in fact, I think the answer to that precise question was, there was nothing. He was very skeptical. He said that one of his memories was that everybody was wearing Mao suits. And if you've got a luxury business and a fashion business, you're probably like, is this the right place for me? And also at the time, the Western brands were confined to hotels, tourist hotels. So they were operating a Louis Vuitton store at the bottom of like the Palace, in the basement of the Palace Hotel. But obviously, he has ridden and been aggressive in exploiting the rise of China and China joining and not just China, but lots of countries in the Middle East and in Asia joining the global economy. The concurrent rise of an affluent class, and then the psychological need. It's so interesting of people who are newly rich to feel like they're a part of, that they're distinct from their fellow countrymen. They're part of a global affluent class, that they feel special.
Right.
And he's just tapped into that need and sold a lot of handbags.
I thought that was interesting too, that you got into, like, he understood the power of logos, luxury logos in particular, right? And really understood that, kind of gave a marking to somebody who maybe was successful, but by having that logo kind of just cemented that position.
I think there was one point in the company's history where they were arguing that the Louis Vuitton monogram had ceased to be relevant. And you fast forward today, I visited Paris for the story, and next to the Louis Vuitton flagship on the Champs-Élysées is a new structure that they're renovating. We don't know what it's going to be yet, and they've covered it in a sort of monogrammed facade, so it looks like a big Louis Vuitton trunk. And the number of tourists who flock to basically a building under construction to take pictures talks to the global resonance of these marks. And you couple that with the way in which he has exploited celebrity, Pharrell Williams at Louis Vuitton, Jay-Z and Beyonce at Tiffany, go down the list. Rihanna started her own brand inside LVMH. And the way, celebrities flock to their shows. There's a reciprocal relationship. The celebrities posting on their Instagram, bathing in this aura of opulence that Arnault has created. It is about, yes, it's about the marks and the monograms. It's also about celebrity and a lifestyle that people aspire to.
He understands that. He understands social media. He's not on social media, though, right?
It's funny, all the kids are, and
he's got, what,
except
5?
for Delphine, the oldest daughter's not. The 4 other kids are, and Antoine, the oldest son, said, "Oh, he's on it, and he monitors, but he's not posting." And they tried to get him on Twitter at one point before it was X, and he was apparently reluctant.
So you met him. Tell us about the meeting and meeting him for the first time.
Well, this might surprise you, but he was better dressed than I was. It's exquisite, right? I mean, the way he holds himself, the way he dresses, to me, he was very French. I was probably very American, but he was generous enough to do the interview in French. My colleague Angelina Rasquet and I interviewed him, and just extraordinarily patient. I got the sense that he enjoys talking about, like, we were not there to press him on succession, on what the next company he's going to buy. I mean, we break some interesting news about that in the story, but we really wanted to know, tell us, share your stories. Tell us how you built this business, how you think about operating 75 disparate houses together. What are the synergies? What was it like, visiting China recently, where in contrast to the first visit, throngs of people are out to see him and asking him to bless their babies. And so, I feel like he got into it and had a good time with us. And then just sat for this extraordinary photo shoot with Reuven Affendor.
It's gorgeous.
And which, makes for a really beautiful inaugural issue of the monthly Business Week.
Okay, we'll talk about the succession element to this in a few minutes, but before we get there, I just want to learn a little more about his empire, the real estate portion of this, because yes, he's known for these luxury brands, these luxury houses, but it's also a real estate company.
That's right. And another one of our colleagues, Natalie Wong, on the real estate desk here at Bloomberg News, really helped us with this. I would say it probably started more modestly a decade or two ago, buying real estate in Midtown Manhattan, on Rodeo Drive in LA. LVMH has a separate arm, sort of an investment arm, L. Catherton. They did a lot of deals through that. And over the time, it's gotten more and more aggressive, where they're now designing whole new shopping districts in cities like Miami, in Montreal, where a whole new luxury district is underway with LVMH as the primary backer, in Asia. And it just gives, well, first of all, Arnaud, a number of ways to win, not just on the sales, not just on the rent to rival companies who take store space, but on the underlying appreciation of the asset. Right. It's an extraordinary amount of power because, we talk to rivals who say, if you're in the prime spot and LVMH wants it, maybe they're the landlord and you say goodbye because they're going to take the space from you, or the landlord is so intimidated by LVMH and its power that they force you to leave. And then we asked Arnaud, do you have too much power? And, his response is hilarious. It's along the lines of, well, if they're complaining, they're not very well managed. So he's got no sympathy. But this is a company, we talk about the advantages of the tech platforms and the power that they have to cast winners and losers. And I thought, with this story, I was writing about the opposite, a figure in a company that has amassed business power in another way. But I think it's sort of the same. I think the real estate is the platform, and they own the platform, and they pick winners and losers and can anoint themselves by giving themselves the primary location, perhaps, discounts on rent, or it's just like the muscle to go and say, the corner of Fifth Avenue and 57th is the luxury capital of the world. They own 3 of the 4 corners now.
It's pretty amazing. It's pretty well. So you talk about that power, right? In terms of this, boutique of brands, if you will. And I just wonder if regulators, though, think, okay, is there too much power? Is that a risk at all as he continues to buy more and more brands?
I don't. I don't think so. There's, we highlight some deals that are now being looked at in the U.S. They're not LVMH deals, right. But different sectors of luxury. But, it's a different set of regulators. There might soon be a different government in France. I probably don't know enough. I mean, I would sort of speculate that they would face more problems from a leftist government than a rightist. Right. And that does seem the direction that France is drifting in now. But, one of the nice tantalizing tidbits at the end of our story is that he has acquired a personal stake in Richemont, which is the owner of Cartier and some other brands. And, he says he wants to maintain its independence, but this is how it starts with him, how he went after Hermes and Gucci famously, that, he is not, even though he's 75 years old, done with his empire building.
The wolf in cashmere is how some inside luxury circles have referred to him. You write about him laying off thousands of people after acquisitions. What's his reputation within the industry?
Yeah, I would say, well, first of all, the layoffs, that was early on when, he was acquiring some of these brands as part of, like Dior, larger companies with a lot of inefficiencies and paring down to just the luxury assets. The wolf in cashmere was a phrase started by, I think, folks at Gucci and then later at Hermes, and the way in which he uses leveraged buyout techniques to go acquire assets. I think he's viewed as a intimidating figure who brings pretty ruthless takeover tactics and business tactics to the world of luxury. But I think there's also a lot of admiration and respect for what he has achieved. I think at one point maybe there was a colder view of him, but how can you not admire right now, and particularly now that he's been a major philanthropic force in France and he's sponsoring the Olympics. There's probably more of a halo now than there ever has been.
Just last question: what do you think people might be surprised about him in your coverage of him in the reporting that might be surprised to find out? I know we covered a lot of ground.
Look, I mean, if you're a follower of this world, there's some stuff in here that will surprise you. If you're not a follower, if you're even a sort of quasi business informed person, you might think that Bernard Arnault is married to Selma Hayek. He is not.
Exactly.
That is one of his rivals, right? And so I think, but a surprising number of people have some of those, impressions. And so, and his wife is a concert pianist, extraordinarily impressive. So to understand who he is, his 5 children who all work in the business are also accomplished, and to understand how he has built this empire and the ways in which he now leverages his power, I think is going to surprise a lot of people.
Brad, we lied. One more question, because you mentioned the children. I promised we'd talk about succession. 5 kids. Very briefly, who should we be watching?
Yeah, I mean all of them, right? Because they're all remarkable. Delphine, who runs Dior, is the only daughter, the oldest daughter. She is the sole descendant on the executive operating committee of LVMH. So I think you'd have to say, like, she's got, she's probably, if we're going to talk about it in a race, and I don't know that they do, she would be the natural. But the way in which his youngest, Jean and Frederic, are getting increasing authority. Alexander, who now co-runs Tiffany & Co., and then Antoine, who is a non-executive chairman of Laura Piana and runs all the image and communication for the company. They all have their pieces, and my impression, by the way, in closing, is that, like people we know well, even though Mr. Arnault is of advanced age, he has no intention of stepping back. He is in it for the long haul.
And if you're playing tennis with him, do mention that rival, because it might give you a little bit of an advantage. Anyway, read the story.
Just don't wear Nikes in the store.
Do not wear Nikes in the store. Incredible. Brad Stone, congratulations. The new launch of Bloomberg Business Week, now a monthly. Brad, of course, the editor of Bloomberg Business Week. Bloomberg Business Week now on newsstands, online, and of course, always on the Bloomberg terminal.
Hey, let's get a check on what's going on when it comes to the trade and business news. Here's Charlie Pellet.
Hi, thank you very much indeed. We are looking at a mixed market right now. ADRs, by the way, of Louis Vuitton, Moet Hennessy, LVMH. Right now, they are trading down 1.8%. We got the S&P, little change, down 1 point right now, less than 0.1%. Dow Industrials up 59, a gain right now of 0.1%. NASDAQ up 31, an advance there of 0.2%. 10-year yield 4.31%, the 2-year 4.74%. Gold down 0.9%, 22.99 the ounce, and West Texas Intermediate crude flat on the day, 80.84 right now. After the bell, we will be hearing from Micron Technology. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. And like we said, check out that new issue of Bloomberg Business Week. Great deep dive and getting a real feel of what's going on, certainly when it comes to Bernard Arnault. And you can catch it on our podcast feed in case you missed it. Having said that,
what's going on in the world of fast food?
One thing you might not find at LVMH.
There it is.
I don't even know. What a crazy segue. Apparently, the McPlant is not coming to McDonald's anytime soon.
All right, this is a most read story on the Bloomberg terminal, and it's about a test from McDonald's of its plant-based burger that they did in San Francisco and Dallas. Was not successful in either market. Those are the words of Joe Erlinger, the U.S. chief of the chain. He said this earlier today at a Wall Street Journal Global Food Forum in Chicago.
Yeah, I love this, right? Consumers just not looking for any kind of plant-based proteins from McDonald's. You might remember, and Erlinger was referring to a previous test in the markets that ended in 2022. The company has said plant-based food has fared better in European markets, but again, the McPlant, not happening, at least anytime soon. I personally love the fries. What's not to love? All right, for those of you on TV, the close is coming your way in just a moment. On Business Week,
we got a great program. Non-alcoholic wine coming up at the end of the show. Before that, the CEO of the Brooklyn Navy Yard. All that and more on Bloomberg Business Week.
On everything you need to get the edge at the end of the market day. This is The Close.
Even with NVIDIA down, the AI trade never sleeps. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. You know what's also not sleeping?
What's that?
Amazon.
That's right.
Market
$2 trillion.
value, $2 trillion. And you can see that reflected in the S&P. Yes, it's flat, but it's that consumer discretionary that Amazon's such a large chunk of that's outperforming in the S&P. Now, aside from that story, guys, I gotta say, it is all about King Dollar. The SOX index is down as we made for Micron. That's more of that AI chip story that Romaine's talking about. But you have yields a bit higher here, and the Bloomberg Dollar Index right around the highs for the year, obviously putting significant pressure on the yen. The question I have is, like, when do markets actually care about King Dollar? But we're definitely not quite there yet, as chips are still in focus.
Yeah, chips are in focus today. AI still remains the story, particularly with those earnings tonight. Earnings this time out of Micron. Remember, its memory chips have been a big beneficiary of the AI build-out. Wall Street anticipating an 80% jump in revenue quarter over quarter and a more than doubling in adjusted profits. Options contracts out there signaling that the stock could move 12% up or down, depending on which way that report goes. Also, keep an eye on bank stocks as the Fed is set to release results of its latest stress tests, which for investors primarily just serves as a prelude to fresh dividend payouts and share buybacks. The big six U.S. lenders repurchased $14 billion of stock in the first quarter, and that puts them on pace for $58 billion in buybacks this year. And don't lose sight of what's going on in the FX space. The Japanese yen right now at its weakest since 1986, fanning speculation the government will have to step in to support the currency again. Will it work this time? Here's Adam Posen at the Peterson Institute.
It's now just a question of managing the downward descent of the yen rather than changing policy. They're not going to be able with intervention alone to stem this.
All right, the biggest obstacle is that vast gap, though, between interest rates in Japan and in the U.S., which just keeps getting wider and just keeps keeping the pressure on the yen. But let's circle back to where we started here, kicking off the show with a closer look at AI and, more importantly, a closer look at Micron coming up after the bell.
Right, so those earnings coming out, the stock has clearly had a monster run. We've had some upgrades recently. Price targets ran record highs. Top picks when it comes to financial, Susquehanna and Citi calling Micron Technology a top pick. My words got mumbled there. And here is the why. I mean, it is legit. This is what we think the Micron revenue ramp up is going to look like over the next few quarters. And this is the estimates from analysts and what we're going to be looking like. So the yellow is first quarter, the white is second quarter, the blue is third quarter, and the pink is fourth quarter. And literally all you have to know is this. It just keeps climbing and climbing and climbing. Now, clearly the AI story is still going to be cyclical, but we don't know what that cyclicality actually looks like. Many analysts are expecting to remain a beat and raise yet again from Micron, but the options market is saying a 12% move in either direction. So if Micron disappoints, you could see a big sell-off tomorrow.
Yeah, this becomes one of those binary types of trades as we kick you off to the close here on this Wednesday afternoon. Kim Forrest stopping by the program right now, founder and CIO over at Boca Capital Partners. And Kim, let's start off here with the AI trade and with Micron and really the idea as everyone's looking for market breadth. Let's talk about the breadth or potential breadth specifically in the AI space. Does Micron deliver that?
It does, and not in a straightforward way, though. What I think people really have to understand is the models that they are training and the models that I think are going to win over time, and it's a long time. It's not going to be tomorrow. It's not going to be the next day. We're talking years, if not a decade, to really let this AI thing become what it can be. What does it need most? Data. And what do you store that data on? Memory. And who makes it? Well, just a handful of people, but Micron makes it, and that's why they're in the focus.
Just to be clear, do you have a stake at all in Micron?
I do. I do not own NVIDIA currently, but I do own Micron, and it's because of the inexhaustible, let's even forget AI. We all make more data, and we all store it forever. I mean, it makes those storage bins that you drive by or those storage places look small and not very important because of all the data each one of us creates every day, and then businesses only create more data. So we are going to be, we just have a lot of data that gets created and stored.
Yeah, but Kim, too far, too fast. We can make that argument for NVIDIA, but also for Micron.
Yep. Yeah, I think, well, they have a weird little hiccup that happened the last couple of years. What the problem is there's only maybe 6 makers of NAND devices, and that's the storage stuff. So they all decided to create new fabricating plants, and then there was a surplus of this kind of product. And it is kind of, but not really, a commodity. So you had too much supply and not enough demand, so prices fell. And now we're kind of leading into the other way, where we have adequate supply, but we're back at a more normal kind of pricing environment where prices go up, not down. And I guess people are looking into the future and thinking, oops, they might have more demand and no way to supply it. So that is probably driving those kind of aggressive projections.
Yeah, I mean, recovering from the cycle low is something, and then you layer on the AI story from that. All right, Kim, let's broaden out for a second. Bank of America had a report out that said it was kind of crazy. It was like the majority of hedge funds own like 4 of the top 5 stocks. Like it's a crazy number. Like they're really concentrated. Breadth is really limited. What do we think about that in a market? How do you manage that?
Well, you don't. You just, you know that this is fast money, right? They're going to move in, they're going to move out. They try to make money in very short time increments. I'm playing a completely different game where I'm looking out 3 to 5 years and saying, things will go up, things will go down, but these are the companies I want to own. So decide what game you're playing and play it. I think the hedge fund game is kind of crazy, especially like whenever all of them are owning the same stocks. What's the differentiator? Yeah. None that I can see. So, you know, be careful of what game you get involved in and know that other people are doing different things, and it may affect your stocks, but it shouldn't affect your outlook.
Do you feel, though, like there's enough price transparency right now in this market, given the narrowness of the rally that we've seen, Kim?
Not really. I mean, I'd like more people to buy other stocks, right? And if you miss, man, do you get punished? Look at General Mills today, right? Mm-hmm. So, you know, even kind of sleepy stocks, if they are not performing, you're going to get punished. And I think that's just everybody trying to overcome the invidious spike that is in your portfolio, that it's just driving the returns and, you know, kind of inescapable.
All right, Kim, rebalancing, end of quarter, half year already done in. What do you expect to be the next couple days?
Oh, it's going to be crazy, you know, and the other thing, which we're not talking about is that can also drive prices, is pre-announcements. There was one in a weird little company called Pool, and they make pool supplies. And it kind of is an interesting thing where you're seeing maybe the money and the pool demand that was huge in COVID is probably met. And so they had a miss on their expectations and they're lowering expectations. And we're going to be really on the watch out over the next couple of days for other pre-announcements. And that might tell us what companies are going to be like in earnings season, which is really around the corner.
All right, Kim, great point. Great to talk to you. Kim Forrest, founder and CIO over at Boca Capital Partners, kicking us off to the close. She talked about Pool Corp. We've gotten a lot of pre-announcements showing potential weakness in the economy. But is that showing up in the economic data? A conversation up ahead with Michael Ferroli, chief U.S. economist over at J.P. Morgan.
All right, plus new home sales in the U.S. slumping to the lowest pace since November. We're going to break down the real estate market with Robert Refkin, CEO of Compass, the largest residential real estate brokerage in the U.S. by sales volume.
And oscillations in the crypto space continue. A conversation up ahead with Fred Thiel, the CEO of the crypto mining company Marathon Digital, his holdings on the outlook for Bitcoin, as well as the elections up ahead here in the U.S. Stick with us. This is The Close on Bloomberg.
From our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
A big week for economic data up ahead. Tomorrow, the third estimate of first quarter GDP, but you also got durable goods along with initial jobless claims. And on Friday, that's the big day, personal spending and income, along with that all-important core PCE inflation, the Fed's inflation metric. Joining us now, Michael Feroli, chief U.S. economist at J.P. Morgan. All right, Michael, come Friday by 8:35, what will we have learned over the last 48 hours?
Well, I think we'll most importantly learn that core PCE number that you mentioned. And I believe consensus are looking for a 1/10 increase on the month, which would bring the year-ago gain down to 2.6%. So getting closer, but not close enough probably to the Fed's target. I think the other thing, I'll probably be pretty interested in watching tomorrow at 8:30. We'll get jobless claims, which, over the past couple of weeks have been kind of drifting a little bit higher, in particular the continuing claims numbers. So far, nothing, concerning or worrisome, but it is some hints there of slowing, so we want to keep an eye on that too.
I'm glad you brought both of those up because it feels like the Fed themselves, whether it's Mary Daly or Michelle Bowman, it's an inflation versus growth thing, right? Yeah. Where they're worried inflation is going to stay too hot or growth is going to fall off too soon. What are you more focused on?
Probably growth. I think we kind of know a lot of the plot line for inflation over the next couple of months, with goods pricing looking soft, shelter inflation probably running firm. But as I said, the jobs numbers, there are some hints there. Again, they're obviously very strong in the payroll number through May, but we'll want to see if that holds up, particularly with some signs of a little bit softer consumer spending in the retail numbers, at least.
So what's the House view over there right now, Mike? Are we looking at a situation here that when she comes out and starts talking about the potential of keeping rates where they are and even raising them, is that so out of the realm of possibility in your forecast?
I don't think it's the most likely scenario. And Michelle Bowman is one of the more hawkish persons on the Federal Reserve Board. But it's certainly not something we would rule out. I think it may be like a 10% probability. We think it's more likely that the Fed cuts this year in line with the median FOMC participants' most recent dot plot. So we think that's more likely given the improvement we've been seeing in inflation, as well as some hints here that GDP growth is moderating, that the job market is getting into better balance. We think that sets the stage for some cuts later this year.
I want to get your thoughts, though, on what's been going on overseas, because even if we do start talking about rate cuts, there's still a big issue right now that Japan is dealing with when you talk about interest rate differentials, the pressure that's been putting on the yen. The yen right now trading around 160 here. I know we still have a few more weeks until the next big meeting over there here, but at some point, they've got to address this, and I'm wondering, is an intervention, if they do choose to do so, is that really going to have an impact? Or is this more just about that interest rate differential and that closing the gap?
Yeah, I think most of the evidence would suggest that intervention is at best a very transitory solution to the problem, and that ultimately the BOJ will have to raise interest rates, and we think that does occur later this year.
Michael, when do we start worrying about the stronger dollar, though? Like, no one's going to want to stand in front of the dollar coming into all the data coming out on Friday, right?
Yeah.
When do we start freaking out about it?
Look, a strong dollar in this juncture is probably a welcome thing from a domestic perspective. It takes pressure off of import prices. It probably reduces a little bit of the aggregate demand for U.S. products. So right now it's serving the Fed's goal. And, a lot of people said, looked at Fed policy and said, oh, it's so ineffectual. Well, the strong dollar is one of the channels through which monetary policy should act to restrain inflation. And we do think that's playing out. And as I mentioned, the goods price story looks like that's going to be pretty benign, in part because I would expect that import prices should continue to look, or should look soft as we go forward with this dollar strength.
As you look around the other parts of the world, Mike, and you look at sort of the economic conditions there, whether it's in Asia or in Europe, and how that feeds back into the U.S. economy, there's been a lot of talk about those correlations not being as strong as they were in the past. Are they?
Yeah, I think that's probably right. I mean, certainly we're seeing some softness, continued softness in China. Last week we had a bit of a setback in the European PMIs, so the growth backdrop isn't looking all that supportive right now for domestic developments. That being said, I think what you see driving the economy over the past year has been sectors that are really kind of insensitive to global development. So in particular, state and local government spending has been strong. Domestic spending on services has been strong. So those areas are going to be pretty immune to small perturbations in global ex-U.S. growth developments.
Yeah, and definitely like going on cruises, but not putting in another pool. Like that, we can definitely see that through some of their earnings. Before I let you go, we have a viewer question we wanted to get to, and that goes back to the growth in the labor part. Which employment survey do you weigh the most? Is it household or establishment? You're already laughing.
Can I say both?
Maybe.
I think in the household, we definitely think the ratios are informative. So employment to population, unemployment. I would think if I had to choose one as a measure of overall employment growth, I would put more weight on the establishment survey, even recognizing that it'll probably be revised down. But I do think it's probably closer to the truth in terms of overall job growth in the household survey right now.
All right, great stuff, Michael. Always appreciate you taking the time for us. Michael Feroli, Chief U.S. Economist over at J.P. Morgan, as we await some additional economic data here in the U.S. I don't know if you saw that new homes data that we got this morning. Not necessarily good, and there was kind of a separate report out there that also showed those inventories, at least for newly constructed homes, at some of the highest that we've seen kind of this whole cycle, I think, right?
Yeah, and then KKR betting on rentals because they say there's just not going to be enough supply, and rents are going to have to wind up going up. That's going to be really tricky for the equivalent owner's rent input into the PCE.
I hate the equivalent owner's rent input into PCE.
I mean,
can you talk to the Fed about that?
No, they don't listen to me. No one listens to me.
On a more upbeat note, did you know we're getting 2 more pandas here in the U.S.?
I did know this.
But they're going to San Diego. The San Diego Zoo.
It was such a bummer. I missed them in D.C. with my daughter. We were like a week late. It was super sad.
Yeah. Anyway, glad they're coming back. Maybe that's a normalization of relations between the U.S. and China. All right, we are going to stick on what's been going on in the housing sector because there has been a lot. Coming up, we're going to take a closer look at Home Depot getting an upgrade today over at D.A. Davidson. We're going to talk to the analyst behind the call and the 5 reasons why he actually says there's a bull case for this stock. This is The Close on Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Let's get a view from the sell side with our top calls. These are some of the big movers on the back of analyst recommendations. And we're going to start off today with Apple, a shiny new upgrade to buy over at Rosenblatt. The firm encouraged by their recent survey, which revealed strong privacy to be the most desired feature for consumers in the AI tech space, which the analyst says actually aligns with Apple's focus. The price target jumping to $260. That's the second highest on the street. The shares up 2% on the day. Next in line, Campbell Soup. And I'm going to do this just for my senior producer, Queenette. JP Morgan calling it good.
There we go.
An upgrade to overweight from neutral, a rating that they haven't had on the stock going back to 2009. The analyst says that the recent acquisition of Sovos Brands, which makes Rao's pasta sauce, is paying off, and it offers proof that the packaged goods company can grow its bottom line. The share is growing today, up by about 3%. And finally, let's take a look at Home Depot, an upgrade over at D.A. Davidson to buy a new price target of $395. The analyst, Michael Baker, says that between a more favorable interest rate environment inching near and higher existing home sales, growth in the home improvement sector should be on the way. Those shares higher by about 1% on the day, and those are some of our top calls. We want to stick with that last call on Home Depot. The shares having a pretty decent day on the back of that upgrade by Michael Baker over at D.A. Davidson. Pleased to say that Mike joins us right now. You laid out 5 reasons for your upgrade on Home Depot, and I want to start off first with one of the big ones there, and that involves the interest rate environment. You think we could see some support there in lower interest rates?
Yeah, that is part of the call, and we don't know if it's going to be next meeting. We don't know if it'll be later in 2024 or early 2025, but we certainly think we're closer to the end of the Fed hiking cycle and nearer to the beginning of an easing cycle. And typically Home Depot stock outperforms in an environment when rates are going down. We've seen that historically. In fact, over the last 2.5 years, Home Depot has underperformed the market. That is part of our call, that we're getting the stock a lot cheaper than other retailers relative to their 52-week highs. And a lot of that underperformance is coincident with the Fed starting to raise rates. Home Depot outperformed in 2020 and 2021. Then the Fed started raising rates, and it's underperformed. So in a lot of ways, don't fight the Fed. And we do think, again, it's hard to know exactly which meeting they're going to cut rates, but we do think the next move is to cut rates.
What about the state of the housing market? Obviously, a lot of Home Depot's fortunes are tied to the nature of housing, what we're buying, what we're renovating, et cetera. I know things have been a little bit distorted over the last couple of years coming out of the pandemic, but what is sort of the outlook on the housing side and how that feeds into earnings?
Yeah, we would say mixed there. A lot of different housing data points in any given week that comes out. We tend to look at existing home sales more than new home sales. Existing home sales have sort of been bouncing along that bottom of 4 million or so annualized homes trading. That's been over the last 4 or 5 months have been right in that range. More importantly, though, than the turnover is home prices. And what we've seen is in the last 6 months, home price appreciation has been up year over year and up year over year at an accelerating pace. So the chart is really going like this. And on an absolute basis, existing home prices were at an all-time high as of last Friday. And that's really one of the most important drivers of underlying demand for the home centers. So that really does play into our call as well, this idea that we're seeing really strong home price appreciation for existing homes. And again, back at a record high.
Hey, Mike, does the demand at Home Depot come from either what you just said, like renovations for existing homes that may get cheaper as rates come down because you can maybe take out a home loan? Does it come from people actually moving, or does it come from new home sales and you need to kind of furnish and paint and do all that stuff?
Yeah, all I would say, but what we've seen historically and what we show in the report, and we have lots of data to support this, is more of the spend comes from people who are staying in their home, but they feel like their home is worth more because of rising prices rather than on the turnover. Now, the turnover, of course, each of the people involved in either buying or selling a new home are going to spend more than the people who are staying in their home. But we're talking 4 or 5 million homes a year that turnover. If you look at it on a year-over-year change basis, it's a couple 100,000 more or less this year versus last year. The other 80 million that are sort of staying put in their homes more than dwarfs the amount of spend for the people who are actually changing homes.
Is this also equally good for Lowe's?
From a macro standpoint, it is. No, we've been long-time Lowe's bulls. We've been recommending that for the last really 6.5 years and not recommending Home Depot. We did downgrade Lowe's earlier this year, and now we're sort of switching to Home Depot. And the reason for that is what we noticed about Lowe's, if you go back 6 years ago, is that the margins were about 650 basis points different than Home Depot, lower, that is. over the last 6.5 years, Lowe's has really closed that margin gap. That's been really good for Lowe's. It's really worked well. What we've seen, though, is that sort of played out, and we don't see Lowe's closing the margin gap anymore. In fact, one of the points that we made in the notes this morning is that the gap is now widening back in Home Depot's favor. So that plays in well, more so for Home Depot than Lowe's. Lowe's margins are actually going down. So listen, we think Lowe's, the new management team who came on a bunch of years ago, have done a great job. But we think that story is sort of playing out a little bit more now.
All right, Mike, thanks a lot. Mike Baker of D.A. Davidson. Appreciate that joining us there. But it all depends on what that rate is, Romain, right? Like, is a 30-year to come down to 6, and then if you have good credit, you're kind of getting 5 and change? Like, is that the magic number? We don't know that yet.
Yeah, I don't think anyone knows that number here. But, I mean, look, at some point, I mean, they're going to have to start selling homes. I mean, people need homes. And, I mean, there's obviously, you have people who buy homes for opportunistic reasons, and some people buy it for necessity. And there's been a lot of talk about how there's such a backlog on the necessity side of it that at some point that's going to show its head. I don't know how much that benefits Home Depot, but maybe that provides some life for the housing market.
But or you can make the argument too, the people like me who have that 2.75% 30-year fix, right? Like, I'm never moving, I'm dying in that home. But if things look a little better, I might go spend some money in Home Depot and do some stuff in the home.
Yeah.
So that, I mean, that could be that upside that Mike was talking about. Put in a pool in my 1,400 square foot apartment. Totally. Yeah. All right, coming up, we're going to continue with the real estate market. New home sales falling in the U.S. down over 11%. Our next guest is Robert Refkin, CEO of the real estate brokerage Compass. We're going to break it down with him. This is The Close on Bloomberg.
You have to distill down what is the purpose of what you do, what is the purpose of your company, and make that very clear, and repeat it and repeat it and repeat it. And it's very clear what our purpose is to make money for the Norwegian population.
So why did you accept the job? You had a great life. I mean, you had a hedge fund that was doing very well. You were earning lots of money.
Well, I had a great life. I had a great life, but I still have a great life, and a really good life. No, I was very keen on that job because one, I think it's one of the most important positions in asset management, right? I love asset management. In terms of the opportunity to develop that organization further, there were great opportunities, and I love organizational development. And then to do something nice for the country. I mean, these three things came together in the same job.
Why do you love asset management? Because you can influence and change the future, or is it being cleverer than anyone else?
Asset management is the most interesting job in the world, perhaps after being a journalist. Why is that? Well, everything you eat, drink, drive, all these kind of things is made by a company. You need to understand psychology in terms of the companies. You need to understand the corporate culture of companies. And then these things change all the time, right? You have the macroeconomy is changing, interest rates are changing, currencies are changing. And the data points are just changing all the time. You just couldn't invent a more fascinating game even if you tried.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep winning World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. We did get some eco data out today. We're going to get eco data over the next couple days as well. So we got some stuff coming.
Yeah, and we got the new home sales, which I think everybody knew wasn't necessarily going to be good necessarily. I mean, it wasn't awful, but you did see that drop there. But I was more interested in the data on inventories, and that now you're seeing a much higher inventory level than what we had in the past, right?
Yes, but you have to wonder kind of what their 30-year fix has to be to change the whole equation. Like, what is that?
Well, it's not going back down to 2 point whatever.
2.75? To be fair, the 30-year fix was never that. You just eventually you get there.
Yeah, absolutely. Yeah, that's refinancing. All right, well, that latest eco data that she's talking about includes those housing numbers, those new home sales numbers, a slump here in the U.S. of 11.3% in May. That's the lowest annual pace going back to November. Let's get a read on the ground from the CEO of Compass, Robert Refkin, joining us right now. Compass is the largest residential real estate brokerage in the U.S. by sales volume. Let's talk about those volumes, Robert. I mean, where do we stand right now in terms of like transactions? I mean, relative to what it was in the past, are we doing worse, better, what?
So over the last 30 years, it's ranged from 4 million homes sold on an annual basis to 7.2 million homes. The mid-cycle is around 5.5. Last year was 4.09, the lowest since 1995. And the population is more than 20% bigger than it was in 1995. So last year was a really bad year. Last month, to share what the current market is, was 4.1 million homes on a seasonally adjusted annual rate basis, which is still very low. We started the year, we thought there were going to be 6 rate cuts. The spring turned into a market where there's an outlook of only 0 to 1 rate cuts. And so it is not a great market, but it is moving, and last year does seem to be the bottom.
I am curious, when we talk about rates, I mean, that really changed the complexion of affordability, you know, going from basically near zero Fed funds rate to 5+% right now. If we do get a drop in rates at some point, in theory we would. I mean, how much do we really need to see that would have an impact, A, on the mortgage rate, but to the point that it would spur maybe greater transaction activity?
And so I think 6.5%, right now we're at around 7%, 6.5% would feel good. There'd be nice movement. I think we'd be at 4.5 million, 4.6, 4.7. But if you get below 6, 5.999, that would be marketing magic. And it would tell, you know, every agent would go out there, share with their buyers that this is a great time to buy, particularly after a 2-year period that reached 8+% mortgage rates.
Does that spur people to actually put their homes on the market to help that affordability issue?
Yes, so we already have more homes on the market, and yes, that would bring more. But if you look at the data, over the last 31 weeks, each week we saw more inventory than we did in the prior week. And that's one of the reasons why, and you saw the new homes data, where year over year, new home sales are down. That's because they're not the only game in town right now. The existing homes brought new inventory to the market this spring.
What is have the prices come down enough to compensate for the higher rates? Like, I feel like the gap has been super wide and it's slowly been coming in. Are we there yet?
So prices right now, I'm sorry to say, are at an all-time high.
Yeah, if we're not there yet.
We're not.
How much more do we have to re-rate to get there?
Well, the one silver lining on a price side is that right now in the market, 37% of all the homes that are on the market have had a price drop, which seems like buyers are finally starting to push back on the upper bounds of affordability. And that's more homes with a price drop in the month of June than any time in the last 10 years.
I'm curious about the geography of all this. Are you seeing differences depending on what part of the country you're in?
Yes. So I think the markets that saw some of the biggest improvements are starting to pull back the most now. So that's Florida. That's Texas.
Texas, yeah.
And some of the markets that saw some of the recent drawbacks, like San Francisco, are all starting to move forward. Now they're helped with, they have NVIDIA, right? And NVIDIA, there are a lot of people that work in tech.
They've got a lot of new millionaires.
They have a lot of new millionaires.
They're going to be looking for a home sometime soon. But it gets to the idea too. I mean, we talked a lot about some of the demographic changes, people finding new places to live during the pandemic, like Florida, Texas, lower cost areas. Are those shifts permanent, or do you think that's going to somehow, these people all cycle back to wherever they originally came from?
I think the majority will cycle back.
Yeah.
I think it accelerated some people that were going to move to Florida anyway in 1, 2, 3, 4, 5, 6, 7, 8, 9 years.
Yeah.
Maybe they moved a little earlier.
Yeah.
But we are seeing people come back. I mean, we're here in New York City. You can see this. The offices are really starting to come to life.
Yeah.
And people are asking people to come back to work.
So I was interested in KKR. There was a Wall Street Journal article out that KKR actually put a lot of money into rentals because they just don't see the kind of supply coming online, and that we will always be short homes, and that the rents are going to start to appreciate really fast. Would you agree with something like that?
Yeah, I would agree.
Okay.
KKR, a very smart company, wouldn't disagree with them on that. But there's not enough inventory on either side, on rentals or in sales. We are seeing the rent inflation starting to plateau on a year-over-year basis, which is positive, and that should come into the data and the CPI numbers in the months ahead.
So why are rents plateauing? Is it just we've just reached the amount that people are willing to pay, or what's your read on that?
Well, I think it's reached the amount that people are willing to pay, one, but also there's more inventory that's coming on the market. People have been building, they have been converting from office into rental. There's more supply of rentals and sale units, as well as new developments that have come online.
With regards to the new developments, so I mean, I know builders, particularly for these gigantic developments, they're looking, 10 years out in the future. They're not as concerned about whether the Fed cuts 25 basis points over the next couple of meetings here. But as they sort of do this long-term planning, are you seeing a big difference in what they're planning? I mean, meaning like before, I feel like before the pandemic was all about these big multi-use buildings. You had to have, a mixture of office, a mixture of residence, and of course retail on the bottom. Is that still kind of the playbook?
I think what I'm seeing more from developers is more pure play.
Pure play.
Less office, more pure play with a wonderful restaurant to bring the traffic and to make it feel high end.
All right, Robert, great talking to you. Always great insights out of Robert Refkin. He is the CEO of Compass, one of the largest real estate firms out there by sales volume. And Alex, I know you're not in the market for a home, but I am curious to see whether we do start to see a rebound in activity. I mean, you're kind of getting the sense, at least here in New York City, that, prices have moderated a bit. You're seeing a little bit more activity, but nowhere near where we were, back in 2019 or before.
And it's going to be interesting to see the refi activity, too. Like, I know some people who have a mortgage rate in the 6s, right? They're just looking for 100 basis points lower, and then they'll refi. So, like, that's going to bring in a lot of activity as well in terms of the brokerage guys.
Yeah, and to this point, too, I mean, as you know, I've been talking with a lot of folks, and one thing that our realtor has kind of pitched to us is this idea that it doesn't really matter. You can lock in this rate right now at, 5.8 or 5.9, and you'll probably end up being able to refinance in, a couple years when Jay Powell gets his act together.
I know, but you don't want to buy knowing you're going to refi. Like, it feels like it's money throwing away. They just want to make the sale. Come on.
No, really?
Yeah, come on.
They wouldn't do that to me, would they? All right, nice conversation there about the housing market. When we come back, we're going to focus a little bit on what's been going on in the crypto space, Alex. In fact, we're going to move to our stock of the hour right now. No breaks here. We just keep it going. We're taking a closer look right now of shares of Marathon Digital in the green, as many crypto miners stage a comeback after Bitcoin saw its worst intraday drop in more than 2 months to start the week. Pleased to say joining us right now is the chairman and CEO of Marathon Digital, Fred Thiel, joining us right now live here on the program. Fred, thanks for being here. Give us a sense here. I mean, I know there was a lot of discussion coming out of that halving in April that, we would see new highs. I know that didn't quite transpire here, but we're still looking at Bitcoin, at least if you want to use that as the proxy, the barometer here, is still kind of holding the line here. So we're not talking about a drop as much as we're just talking about a plateau.
Yeah, I think Bitcoin is trading sideways. There's no real macro news that's going to drive Bitcoin price up at the moment. Everybody is waiting for Jay Powell to essentially, announce the first interest rate decrease. People are hoping that that'll hopefully happen after the Wyoming event. We'll have to see. Other than that, we're seeing some noise in the market regarding the Mt. Gox distribution. Mt. Gox was a crypto exchange that was hacked, and many years ago in Japan, actually, it was one of the leading exchanges at the time. It was sort of the Binance of its day. And that bankruptcy and the Bitcoin that was held are about to be distributed now after many years. That's about $9 billion worth of Bitcoin. So there's been a bit of a supply shock rumor. We saw Bitcoin price drop down to its support level, which is around 57,000 the other day, and then bounce quickly right back up. There's still a lot of buyers out there, and there's no real movement in the market.
Well, I'm glad you point that out, because I am curious as to what you think sort of the next potential catalyst could be that could move it, whether it's up or down here. There's been a lot of discussion here about economic conditions, obviously a lot of concerns about the fiscal deficit, and now you have at least one of the major presidential candidates making this a campaign issue.
Yeah, clearly Bitcoin has become an issue in the political campaigns. I interviewed Ted Cruz yesterday at the Mining Disrupt conference here in Miami. And, it's clearly on the Republican agenda. The presidential candidate on the Republican side, former President Trump, is obviously, taking donations, contributions in Bitcoin, and also very pro-Bitcoin. There's a stance about Bitcoin being important for national security, that all mining, Bitcoin mining, should be done in the U.S. And so I think what we're seeing in the marketplace is generally a more positive wind from both sides regarding Bitcoin. I think the Biden administration, which essentially had been at war with crypto and Bitcoin after the FTX debacle, has started to kind of soften their stance a little bit, because there are 55 million voters out there who believe in crypto and Bitcoin, and that's a very big voting bloc. Outside of the election, the economy, really, you have a correlation with Bitcoin and risk-on assets. And as we're starting to see in the market now, things are cooling down a little bit. We're starting to see some slowdown in growth. Risk-on assets are sort of becoming a little bit less popular outside of some of the key trendsetters, on the tech side. But I think what we'll see is Bitcoin will trade sideways for a while here, waiting for a catalyst. The next catalyst is likely going to be an interest rate drop. If you look at historical cycles, you would expect Bitcoin to start moving up here towards the end of this year, have kind of a double top, as it's traditionally called, go down in the early part of next year, and then run up through the end of next year to kind of a 2x where it is today. We'll have to see. History isn't always a predictor of the future. But what we are seeing is a lot of interest from institutional investors. The ETFs really are predominantly a retail product today, but we're seeing a lot of institutions evaluating it. You're seeing pension funds evaluating, insurance companies, and sovereigns are beginning to accumulate it. So I think there's only upside.
To that point, how much do you think that pension funds, et cetera, are going to be accumulating? Are we talking like 10% of portfolio, 5%, 2%? Because we don't know that answer yet. And that's sort of the catalyst that everyone's pointing to, particularly when the ETF was finally approved by the SEC.
So I've had conversations with some state pension funds, as well as very large groups of wealth advisors. And the general belief, where I thought it was going to be around 1% or, maybe somewhere 50 basis points, I'm being told 2 to 3%, which is a pretty large number when you put it into the context of the amount of capital that's on the wealth side, wealth management side, and on the pension side. So, the risk-adjusted return of Bitcoin over a historical period is very attractive for these funds and investors. And I think now that it's been legitimized, we're going to start seeing slowly but surely more and more. One other bit of news that I think it's important to note is most of the big wirehouses still have not approved marketing of the ETF to their clients. When that happens, and it is in the process of being done, I've been told somewhere between 2 to 6 months from now, that will start a flood of large kind of retail investors. Again, the wealth management clients coming in.
When you mentioned the difficulties of the Biden administration, we did have the Bitcoin ETF approved then. It looks like the Ether ETF will also be approved. What's your pitch to the Biden administration? What's your pitch to Trump's side?
Well, I think, for Trump's side, it's a voting bloc, right? Both sides want these voters, these 55 million voters who are believers in crypto. Both sides want them. You've seen bipartisan work in Congress related to the repeal of SAB 121. You see a lot of effort in Congress that's bipartisan, trying to get regulation done. The ETH ETF, I think, was potentially an attempt by the administration to kind of say, hey, we are crypto friendly, as opposed to, an enemy of crypto. The war on crypto, as Elizabeth Warren had declared it, I think is pretty much dead, at least for now, through the election. Depending on which candidate wins the election, after the election, who knows? If the Biden campaign comes out on top, it may be back to war on crypto. If the Trump campaign wins, they seem to have stated a position where they are very pro Bitcoin and believe in Bitcoin mining, and we're obviously very supportive of any stance and any candidate who is supportive of Bitcoin and Bitcoin mining.
All right, Fred, thanks a lot. We really appreciate you taking the time to join us. Fred Thiel, he's Marathon Digital Chairman and CEO, joining us there.
I'm curious, do you think this is going to come up in the presidential debate on Thursday night?
Absolutely no idea.
Yeah, I don't know.
You?
Well, I mean, Trump has kind of made it a point. I mean, we know that he's scheduled to meet with some of the Bitcoin executives, and he has this conference that he's supposedly going to, according to Axios, in July as well. So he's certainly making it a thing. So I don't know. I don't know how much appeal it is, but according to Fred, I mean, 55 million voters apparently think this is an issue.
It just depends on sort of what their list of voting is. Like, is that the number one issue you're voting on? Is Bitcoin?
I don't know.
I highly doubt that.
I don't know. Yeah.
Is it?
No, I don't know. Well, not for me, but
not for me.
Yeah, sure.
I'm just more curious as to what, do we know what asset class it is yet?
Bitcoin?
Yes. Like, do we know?
That's a loaded question, Alex.
Like, is crypto a security? Is it a commodity? Like, do we know yet? Is it go with NVIDIA?
Alex, even Gary Gensler doesn't know the answer to that question, which I think is why we're in this mess to begin with.
This is why I get so confused then with allocation. All right, well, coming up here, we're going to continue to count you down to the closing bell as Jonathan Krinsky, BTIG Chief Market Technician, will be joining us as we're so close to the end of that second quarter. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming.
So we're looking out to the market on closing balance. S&P 500, 440 million to the buy side. NASDAQ 100, 430 million to the buy side. Dow 30, 60 million to the buy side. Mag 7 stocks, 220 million to the buy side.
People really have to understand is the models that they are training and the models that I think are going to win over time. And it's a long time. It's not going to be tomorrow. It's not going to be the next day. We're talking years, if not a decade, to really let this AI thing become what it can be. What does it need most? Data. And what do you store that data on? Memory. And who makes it? Well, just a handful of people, but Micron makes it. And that's why they're in the focus.
Kim Forrest there over at Boca Capital Partners. She helped to kick us off to the close just about an hour ago. A look ahead to what's going to happen after the bell with those earnings out of Micron and whether that AI story, I guess, takes on a different complexion. It won't just all be about NVIDIA.
Yeah, or like the beat and raise story can continue. But it's not just Micron that we're looking at. It's Amazon, $2 trillion market cap. That's really propelling the S&P higher, really propelling tech stock higher. And here's what the stat I was searching for when I was talking to Kim. 1 in 4 funds, hedge funds, hold over 40% of their portfolio in just 5 stocks. That's according to Bank of America. Talk about some serious concentration risk.
Yeah, absolutely. But I guess nobody wants to get left behind. I mean, that's like kind of the ultimate fear of missing out. You got to be on the NVIDIA train. But as Kim said, she actually wasn't a holder of NVIDIA. She was in Micron and a few others. And I think a lot of people are sort of looking at those, I guess, secondary stocks, for lack of a better phrase. No disrespect to Micron. Those earnings coming after the bell a little bit later tonight. Let's talk a little bit, though, about some of the moves that we're seeing in the broader market. And let's bring in Jonathan Krinsky. He's the chief market technician over at BTIG, helping us count down to those closing bells, just about 8 minutes away. All right. I'm really confused right now, Jonathan. When we're talking about a market that now seems to be inching back towards its record highs, whether you're looking at the NASDAQ or the S&P, despite the consolidation that we've seen over the last couple of days, I don't know what the fundamental case of that is, but are you seeing sort of technical indicators that show that that momentum can continue to propel stocks higher once we get past the end of this quarter?
You know, it depends which stocks you're talking about. We're continuing to see unprecedented statistics in this market on a daily and weekly basis. NVIDIA, for instance, when it was the largest market cap company in the U.S. last week, traded 100% above its 200-day moving average. We went back and looked at every largest market cap company in the U.S. since 1990. And the largest spread that company has ever traded above a 200-day was 80%. That was Cisco on the day of its all-time high in March of 2000. So, look, we wrote a note today that's kind of whack-a-mole in the top 10 names. So, when one name takes a breather like NVIDIA today, you have Amazon and Apple kind of picking up, lifting the boat. So, as long as that rotation among the top names continues, then the S&P and NASDAQ will continue higher. The issue is that we just can't seem to get this broadening under the surface. Even you had biotech try to break out a few days ago, it gives it all back. You have, small caps in general just can't seem to muster any sort of sustainable rally. So, S&P and NASDAQ, yes, they can continue higher as long as these big names move, but,
Well, that's what I'm curious about, because everyone keeps talking about, oh, we need to see the breadth. We need to see the market broaden out here. And I guess, I don't know, if you look back over the last, 8 or 9 months, I mean, some will say, well, I don't know. I mean, 7 to 8 stocks brought us here. Why can't they continue to take us even further?
Yeah, I mean, it's a bit of a paradox if you think about it, because the bigger those names become in the index, the less that breadth matters to the index, assuming those names keep moving higher. If you were to take it to the extreme, and if those top 10 names made up 90% of the S&P, then obviously the rest of the 490 names could, essentially go to zero and it wouldn't matter. So I think it's always a double-edged sword, though, right? So as long as that's what we've been saying, as long as those names keep going higher, the S&P is fine, but I think most investors don't just own the S&P, at least on the institutional side, and that's the issue. It's just hard to get any sustainable rally outside of those big names.
So, Jonathan, when you have this kind of concentration, what is the risk, and what does a blow-off top wind up looking like under these conditions?
Yeah, I mean, I think there's been a lot of parallels to August, September 2020, if you remember that period. That was when Apple was moving higher into its stock split. You had the NASDAQ kind of, accelerate into the upside. So we haven't quite seen that sort of acceleration because, again, we've kind of had, a push and pull among those top names, but we are seeing signs, when you see those names move up without breath. For instance, today, the NASDAQ 100 was green with only about 20 names in the NASDAQ that were actually higher. That's only happened a handful of times. So, that sort of move is analogous. I think ultimately to see that real blow off top, you would want to see the index moving up with volatility moving up as well. And we're not seeing that. We're kind of seeing volatility near the lows. So I don't know if you could call it a blow off right now. I think you're just saying we're lacking some participation. And that's kind of the risk is that, those big names pull back here.
The other part of this note that Bank of America had, Savita Subramanian had it out, was talking about the rise of passive equity inflows. And it's not the only person I've heard talking about this. And I'm wondering how much that's distorting the overall market action. When you have the passive having to rebalance every day, it makes these 10 minutes really important, but also it becomes a circle that you just keep bidding up the same stocks over and over.
Yeah, I think that's right. I mean, you mentioned just before, what percentage of funds have in the top 5 names, and so it's on the institutional side, it's on the retail side. Given the advent of ETFs, there's been a lot of talk about this XLK ETF, which is the tech sector ETF. 2 names now, Microsoft and Nvidia make up, I think, over 40% of that ETF. So certainly that's a factor. But again, it can work the other way too, but we just haven't seen that unwind yet.
So Jonathan, to kind of wrap this up for us and give us a sense here, as we start to talk about the earnings season coming in, where fundamentals are going to be maybe a little bit more of a focus here, and how that affects the technicals and the momentum trade, if at all. Is there a correlation there that investors should be looking at, or are those two, based on the types of investors that would go for one or the other, are they still divorced from each other?
We don't tend to look, so much at the actual underlying fundamentals as technicians. We're looking at price and trend. But one thing we do look at, you mentioned in the earnings season, is we do look at the seasonality aspects, the calendar. There's been a lot of talk about how July is quite bullish. That's certainly the case. In almost amazing stat, the NASDAQ 100 hasn't been down in July since 2007, so like 16 straight years. Wow. I think the issue is a lot of people knew that coming in. I think that's part of the reason why we've seen so much strength here in June. So we could be in for a little bit of a surprise in July, given that I think some of that seasonal strength was pulled forward. But certainly that's a pretty impressive stat, and that's hard to fight.
All right, Jonathan, I'm going to have to leave it there. Great stuff. Jonathan Kritzky, Chief Market Technician over at BTIG, helping us count you down to those closing bells. Bells, Alex, right now, just about 2.5 minutes away.
I find it so interesting, though, particularly in the next couple of days as we head into the end of the second quarter. You have those passive flows. You have those hedge funds so heavily invested in just a handful of stocks. What does that do, then, to the normal seasonality trends? What does that wind up doing when we come to earnings? What kind of risk is embedded in that?
Yeah, and I feel like this summer's going to be even more weird because you're still waiting on the Fed. And then, of course, there's all the uncertainty right now out there going on with regards to the election as we move closer to these closing bells. Our coverage right here on Bloomberg starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Alex Steele here to take you through the closing bell. It's now our global simulcast. Scarlet Fu joining us in the TV studio. Carol Massar and Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms here on this Wednesday afternoon to parse all the crucial moments of the day.
Yeah, I don't know about the crucial moments. Maybe a Treasury auction. I don't know. Maybe just a countdown to the inflation print on Friday. Having said that, we did see some buying into the close. Romaine, you did see the S&P, all of the major indices actually tick a little bit higher. But if you look at those numbers as you were breaking them down, and that we will break down at the close, we're seeing little changes here, Tim.
Yeah, and I think I'm wondering if the summer's just going to be like this with really quiet trading days, maybe until the end of the day when we see a little more activity. The bond market, not a snooze today. Seeing yields move higher over there.
Yeah, a pretty decent auction for a second day, for a second time in as many days. But, I think about how we've got the end of the quarter and the end of the month and the end of the week coming up this Friday. No one really wants to get ahead of that core PCE data. And if you look at the gains that we've seen this quarter and this month, pretty respectable. 4.3% gain for the S&P 500 this quarter, 4% gain for this month. You don't really need to position before it.
You know what nothing's going to do? Nothing's going to get in the way of the dollar right now until you get through all that data. I mean, this high since November for the Bloomberg Dollar Index, putting some serious pressure on the yen, and you wonder when that starts to break stuff.
Yeah, certainly the dollar elevated here on the day. We're seeing a bit of a pullback in the Treasury space, pushing yields higher, and green on the screen for the U.S. equity markets. It could have been a different story with most of the major indices opening the day in the red. Most of them are going to finish the day in the green. That includes the Dow Jones Industrial Average up about 21 points, just a fraction of a percent as we wait for those numbers to settle here. The S&P 500 up about 9 points or 0.2%. The NASDAQ Composite 87 points higher or 0.5%. But the Russell 2000, that's going to hold in the red here on the day, lower by 4 points or 0.2%.
All right, to the S&P 500 we go, guys. Certainly much more of a negative risk-off trade if you look at the individual components. 332 names in the S&P 500 lower for the Wednesday trade. Scarlett, you've got 168 to the upside, 3 unchanged.
And because we got that last-minute lift in the major indexes, we now see 3 sectors finishing in the green. 2 of them are among the biggest, right? Consumer discretionary up a healthy 2% thanks to Tesla, Amazon, and the cruise line operators. And tech went from negative to positive in the last hour or so, gaining about 0.4%. Communication services also gaining as well. On the flip side, energy, financials, and healthcare have been weak all day long.
All right, everybody, let's get to some of the individual gainers. Amazon, did you see that? Rallying up to $2 trillion for the first time. So a record there. It's up roughly, I think, about 27% so far here in 2024. So no surprise to see it a top gainer among the S&P 500 and the NASDAQ 100. So again, up about 4% here at the close today. Got to go to FedEx. We broke down their earnings right yesterday. Number 1 gainer in the S&P 500, finishing pretty much at its highs today, almost 16% to the upside. The company forecast profit above Wall Street expectations, said it would buy back $2.5 billion worth of stock over the next year. So really a big lift to that one, and really kind of the signs of that sweeping reorganization and cutting of costs really taking hold. Micron, though, coming across the Bloomberg.
Yeah, adjusted revenue in the most recent quarter coming in at about $6.8 billion, relatively in line with street estimates. They were looking for about 6.7. We should point out that's about an 80% increase from the quarter about 1 year ago. Here's your bottom line number here. Adjusted operating income, $941 million. The street was looking for $869. Adjusted EPS, 62 cents a share, a big beat of about 12 cents a share there. And here's your guidance going forward. The company saying the growth, it will continue. 4Q adjusted revenue, the company guiding to $7.6 billion plus or minus $200 million. So interesting there. And adjusted EPS of about $1.08 plus or minus about 8 cents. So you see the shares moving lower here, guys, in after hours trading.
Yeah, is this just not enough for something? Alex. Like it just wasn't enough of a beat? Wow. I mean, these are really strong numbers.
Yeah, but this is a stock that had surged 67% this year, riding the coattails of AI excitement since the last earnings report, up 48%. So it really needed, investors really wanted to see a wow.
Is it the cash flow from operations, $2.48 billion versus 24? I mean, that's huge. But the estimate was for $3.24 billion. I don't know. I don't know whether we're splitting hairs here, but investors aren't splitting hairs. The stock's down 8% here in the aftermarket.
Yeah, adjusted operating expenses even came in below estimates at $976 million versus estimates of $1.01 billion. Again, those revenue numbers coming out, beating expectations, $6.81 billion, up 82% year over year, beating the estimate of $6.67 billion. Adjusted EPS, 62 cents. Beating estimates of 50 cents.
I do wonder, though. I mean, I'm just looking at the revenue forecast, the range that they gave of 7.4 to 7.8 billion, and the street's kind of in the middle of that range. So I don't know if this is more about just expectations were so elevated. Again, they were looking for 7.58. So if you take the lower end of that range, that could be a miss, and maybe that's causing some people concern. They're also forecasting adjusted gross margins for the fourth quarter, their fiscal fourth quarter, of 33.5 to 35.5%. Again, the lower end of that range would be below the average of street estimates of 34.5.
But check out this headline. AI demand drives 50% sequential data center revenue growth. That is truly an unbelievable number, and that's the AI demand side. That's not accounting for the actual cyclicality of things like PCs and smartphones and stuff like that.
It is a real big sea change that we've seen with Micron, because not so long ago we were talking about this glut of memory chips. Remember
exactly.
how everyone had bought up all these memory chips during the pandemic, then they were hoarding them and drawing down on them, and Micron was suffering from this, and then all of a sudden the AI story kicks in.
Fourth quarter adjusted gross margin, 33.5% to 35.5%. The estimate was 34.5%. So again, I can't tell whether it's widening up some of the forecasts a little bit. So, and if you're on the street, and like Scarlett, you mentioned, the stock is up more than 60% so far this year. Like, do investors say, hey, listen, I don't want any room where you might be a little bit lighter than what we've been thinking?
And we should also point out, you're also seeing some of its peers also move lower. Western Digital down about 3% here. Also, some of the bigger chip makers like Supermicro, Broadcom, basically all your AI favorites and NVIDIA all lower in after hours trading.
You know, the company hasn't posted yet the press release to the website for any color. It hasn't been updated since last quarter. It's not yet on the terminal.
It just came out, actually.
It did just come out? Okay, so I better keep refreshing.
And the first thing they say, the president and CEO, Sanjay Mehrotra, is robust AI demand and strong execution enabled Micron to drive 17% sequential revenue growth, exceeding our guidance range in fiscal third quarter. We're gaining share in high margin products like the high bandwidth memory, HBM, and our data center revenue hit a record high. So again, AI mentioned several times in this one paragraph.
Yep, excited about the expanding AI-driven opportunities ahead. They're well positioned to deliver a substantial revenue record in fiscal 2025. The stock paring the losses a bit, now down by just about 5.
I am curious though, what would you want to hear out of them on the conference call? Because sometimes we'll see a reversal once the executives have a chance to explain themselves. But what can they say here that you think would
I want to know people are buying and spending. I want to know the capital expenditures by customers and clients are continuing, right? I want to know that those orders are coming in.
Yeah.
I think something also to know is what we've been getting at is just taking a look at the fourth quarter revenue earnings estimates, and so why that low end was a little bit lower maybe than expected, maybe why that forecast is so wide. Why do they have so much uncertainty with that?
Well, shares actually, they're recovering a little bit, down about 4%. They were down as much as 8% a little earlier in the after hours. Again, this is all just happening in the minutes after the trade. A lot of questions maybe will be answered on the call when it starts at 4:30, but maybe not.
And to get a sense also of whether executives are being extra cautious or, and holding back and kind of dropping a surprise during the conference call.
A surprise? Wow, it's gonna be like
it's like Bob Iger. He puts on a show, right?
Because at the end of the day, we all know that this is still going to be cyclical. We just don't know what that looks like. We don't know what the AI chip story looks like in a cyclical world. We know what the regular chip stories is. We don't know how quickly it's changing. So any sort of color on that, I would find quite interesting.
That's the thing, though, too. Every time we talk about this, everyone talks about this is just some sort of endless addressable market, right? Isn't there a point where you've bought all the super chips out of NVIDIA, you've bought all the memory stuff from Micron or Western Digital or whoever? At some point, doesn't it tap out?
Well, the idea is that then these companies develop chips that are even more advanced that those customers then need to go buy to train their AI even more.
How much are those going to cost, though, Tim?
You got
a lot of money.
New chips.
If you have to ask, Romain, you can't afford it.
I can't afford it.
What I will say is Bloomberg Intelligence, even Citi, Bloomberg Intelligence, they were talking about, could post results above the midpoint of its guidance range. Citi, we expect the company to post results and guidance above consensus. So I think it maybe just goes back to a little bit of expectations. So I don't know.
And what?
Stock's still down about 5.5%.
Up 66% so far this year.
Yeah.
So expectations high.
Okay, sounds like there's some questions for the execs on the call, guys. All right, that is a wrap. Our cross-platform coverage, breaking down Micron earnings and the market close on this Wednesday. Radio, TV, YouTube, Bloomberg Originals. We call it Closing Bell. We'll see you again, same time, same place tomorrow.
All right, you're watching The Close right here on Bloomberg Television. Our coverage continues a deeper dive into those results.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool, It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. Let's set you up for how the markets ended here on this Wednesday afternoon. Remember, we opened pretty much across the board in the red for the major indices, but finished almost across the board in the green, with the exception of the Russell 2000. The S&P 500 inching up by about 0.2%. Similar moves that we saw on the NASDAQ, and a much smaller move on the Dow, but still in the green. Some softness today in bank stocks, and some big softness that we saw earlier today in chip stocks. And we're going to get back to that story in just one second here, but also keep in mind on what's going on in the rate space and the FX space. A lot of softness there, at least if you're on the Japanese side.
Yeah, absolutely. Let's take a look at some of the day's big equity movers. We're going to start with Whirlpool, up 17%. It did gain as much as 19%, the most since March 2020. And this after Reuters reported that German industrial company Bosch is considering making an offer for the appliance maker. Whirlpool, as we know, has seen disappointing sales as U.S. shoppers pull back from big ticket purchases because of inflation and because of concerns about the economy. Now, Aptiv is a car parts maker. That stock dropping 8% on the day after one of its key customers, Volkswagen, announced a $5 billion joint venture with Rivian. Piper Sandler downgraded Aptiv to underweight from neutral, saying that this JV strikes at the very heart, at the very core of Aptiv's strategy. And you can see Rivian finishing the day up 23%. For the unprofitable company, this financing deal, this joint venture, I should say, with Volkswagen is a financing lifeline. Now, our top story this hour really is the beneficiaries of AI. Memory chip maker Micron has been a big one. Its shares up about 66% this year on anticipation it will benefit from demand for AI apps and a ramp up in high bandwidth memory chips. At the same time, you look at the financial sector, it's deploying AI to assist in credit modeling, fraud detection, and among other things, reducing repetitive work for junior bankers. All of this value add will have huge implications on the kinds of human talent the industry will recruit in the future. We're going to get into all of that this hour.
All right, we certainly are. Let's get right to it, though. Micron, those results just out. The company's forecast providing a little bit of a disappointment here on the day. 7.4 to 7.8 billion. That's the range they're giving. The lower end, slightly below the average of street estimates. Though we should point out the results for the current quarter as well as the quarter just passed. We're still talking about tremendous growth in this company, 80% revenue growth, and a more than doubling in their bottom line. But apparently that's not enough. Pierre Ferragu joining us right now, Global Team Head of Technology Infrastructure over at New Street Research. All right, Pierre, I know expectations were high, but it kind of makes me scratch my head when I see a company grow revenue by 80-something% and almost double their bottom line. I sort of wonder, are investors just being unrealistic here?
I wouldn't say unrealistic, but they're too much of in a rush. You know, in memory, you don't make money because you're selling more memory chips. You make money only if you sell more memory chips than you can manufacture. And so we are just coming out of a very deep cycle, down cycle in memory, and we have AI coming up, like driving very, very, very strong growth in demand for HBM chips. And so this demand from AI needs first to suck out, the overcapacity of existing fabs. And it takes time, because it takes time to get these chips out. And once the fabs will be at full capacity, then we will see in the economics of Micron the full potential of AI for memory, which is very strong growth over limited capacity. Manufacturers have not been spending much on capex for the last 18 months, and that's where really like the economic model of Micron is going to take a significant sharp turn. So I'm not surprised by the numbers today. I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast for Micron. So it's just a game of being patient 1 or 2 more quarters.
You
2
mentioned,
or 3 more quarters.
Pierre, you mentioned the glut of memory chips that we had seen that Micron is just getting over. We know that Micron makes both DRAM, those memory chips, and high bandwidth memory chips. Are both products seeing upswings of the same kind? How do their trajectories compare with one another?
So it's a very good question. So DRAM was at a very, very low bottom.
So following the close of the US cash equities markets, just going to give you guys a quick market wrap of the session today. So stocks moved up in the last stretch of a solid quarter, with a tiny group of high-flying technology stocks leading the way. Nvidia was struck by a second bout of volatility, but it recovered a few minutes before Wall Street closed today. The poster child of the artificial intelligence mania has been on a roller coaster ride, mostly influencing general market mood. Amazon surpassed $2 trillion in valuation in a surge that pushed the e-commerce behemoth even further into historic territory. The S&P 500 hovered near 5,480. FedEx surged 15% on a bullish forecast and buyback plans. The KBW Bank Index edged lower ahead of results from the Federal Reserve's annual stress tests. Micron Technology reports earnings after the closing bell today, which they have already printed, seeing beats in EPS and revenue. And so Treasury 10-year yields topped 4.3%, and a $70 billion sale in 5-year notes showed signs of good demand. The dollar hit the highest level since November, and the yen slided to the weakest since 1986, which is boosting risk of intervention.
And so there is one thing that might confuse a bit investors at the moment is that you have supply constraints in HBM because it's difficult for these guys to ramp the packaging production lines, but you are not in undersupply yet for the die itself. And that's what's going to come in the next 2-3 quarters, and that's going to make Micron economics look way, way stronger than they are today.
Yeah. Pierre, final question to you very quickly. What do you want to hear from Micron on the conference call today?
I'd love to hear them talk about, how they see the increase in production capacity for the back end of HBM, for the packaging of HBM. So that it gives me good hints at when HBM is going to fill up the front-end fab, the one that is manufacturing the die. That's really the key. How fast can HBM ramp so that it can fill in the excess capacity of the main front-end fab? And that's when you will see margins like pricing shooting up across the board, not only in HBM, everywhere, and then gross margins going to new highs.
Right. Okay. Got it. Thank you so much. Pierre Ferragu of New Street Research giving us the instant analysis here on Micron after its earnings came in better than expected. And Romain, we saw the initial reaction was a decline, but we know there's a lot of options activity around the stock too.
Yeah. And I mean, look, I don't know how much you can read into the price action. For all we know, we get to the cash session tomorrow and this thing rallies 30% given how crazy investors are these days. But it also just shows you the price of high expectations, right?
Absolutely. All right. Coming up, we've got conversations from Bloomberg Invest with Robin Grew of Man Group and Derek Waldron of JP Morgan. This is The Close.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has with full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting.
At 4:30 p.m. Eastern Time, we get the results of the Fed Bank stress test.
And recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
All right, on the heels of those earnings out of Micron, let's continue to focus on what's been going on in AI. The Bloomberg Invest Conference in New York wrapping up today after 2 full days of discussions, and a big topic of conversation was AI, not just the future of those folks making the picks and shovels, but how asset managers will actually benefit from the technology. I had a chance to sit down with the CEO of Man Group, Robin Grew. Listen to what she had to say about the impact it's having on the financial sector.
AI is exciting. And it's an efficiency. When I talk about how we use technology, artificial intelligence, any sort of NLP, large language models, it can move through what it is to be more efficient in data research, in how we execute transactions or trades more generally. It is how we put transactions and how we put content together. It's around predictive models, be it in financial predictions or in ESG. It's any number of these pieces of the puzzle. It's about the fact that we have sentiment analysis, that we're able to deploy technology in a way that enables our discretionary traders to operate more efficiently and effectively in their thesis, or in quant as we go out to more markets, more data sources, to be able to see whether we can find more alpha, which is ultimately for the benefit of our clients.
How much further can you deploy this technology in AI? I mean, I know it's there, but what's the next evolution of it?
I think, one, you're right. One, this evolution of technology is just the next one. There'll be a one after this and the one after that, and we'll be, I think, adopters of those things within reason and within risk measure to make us smarter. But what we're really after is ensuring that we continue to grow content and that we have relevance to allocators, to our clients. This is a space where clients are looking for more from fewer managers. They're looking for greater content. They're looking for more customized solutions. When you look at Man's AUM today, 2/3 of our AUM is now in some form of customization. When you look at the clients that we have, the top 25% of our clients are in 4 or more of our strategies. That's because clients want more customized solutions to the real challenges they're facing. These markets are difficult to navigate. The world in which we're operating is tumultuous. It is tricky. And so when you are sitting down with clients, when you're working with them, you want to be answering the questions they have, the challenges they have, working through those challenges with them. And so for me, it's about growing content and capability. It's about growing and being sure that we are still relevant and that we're at the table with clients as their partners to navigate these market cycles.
And that is the CEO of Man Group, Robin Grew, speaking at the Bloomberg Invest Conference. I caught up with her yesterday, and I know you were down at the conference, I believe today, right?
Yeah.
And you had a chance also to talk about AI. We talked a lot about AI at this conference.
We do, because there's so much hype around it, but there's also a lot of fear about whether it's going to take over our jobs. It's supposed to add value and make things more efficient, but at the end of the day, what does that mean for the human jobs that we get paid quite a lot of money to do? What I learned from both Derek Waldron over at JP Morgan and Deb over at PNC, is that they're not quite there yet. It's all the AI that they've deployed, they've implemented, is still back office. It's still internal facing. It's meant to help people do their job more quickly and more efficiently, but not something that's customer facing yet. They're moving very slowly because the financial services industry is highly regulated.
That's an understatement. Yeah, but it was a great conference, and of course that is wrapping up now, and we'll hopefully get you some more from that conference as soon as we have a chance to. We do want to go to some breaking news here. Some developments coming out of the South American country of Bolivia. We are learning that Bolivia's presidential palace was stormed by soldiers led by a top general in an apparent coup attempt. This was shortly after an armored vehicle was seen crashing into the presidential palace. Bloomberg's Creighton Harrison joining us right now. He leads our coverage in Latin America as our Mexico City bureau chief. Creighton, I know details are a little bit sketchy, but what can you tell us about what's happening?
Yeah, details are very sketchy at this point. This is going to take a while to sort out.
At 4:30 p.m. Eastern Time, we get the Fed bank stress test results.
Coup attempt. This is a General Zuniga, who at least until very recently apparently was a very high-ranking member of the military, may have led some parts of the Defense Department in Bolivia. There appears to have been some falling out between him and President Arce in Bolivia, and it's led to this moment. So we know that President Arce has denounced some what he called irregular military actions that were going on in the Central Plaza in La Paz, the capital. We haven't really heard from him since then. The vice president has called this a coup attempt, and Evo Morales, the former president of Bolivia, who's had his own differences with President Arce, has also been denouncing this as a coup attempt. So the left of Bolivia is really aligned over this in a way that they haven't been in a while, but we'll see how that plays out as well.
Creighton, that's really interesting given the divisions between Arce and his predecessor. Can you give us a little bit of background here? Because there have been some protests outside of Bolivia's capital, La Paz, in recent days. What's the backstory there? What's driving that?
Yeah, so what the government in La Paz has been doing is around fuel, and I'm not going to pretend I need to brush up on the details a little bit here, but the basics are that fuel prices are rising, and there's been some lack of access to fuel. So you've seen it especially from the trucking industry in Bolivia, that there have been some protests on the roads, but this is also affecting everyday Bolivians as well, and so there's been some degree of unrest over this. I mean, this is a country that's having a lot of issues right now. We also know their gold reserves, which they depend on very much, have been dwindling, and so sort of the thought that a fiscal crisis was on the horizon has not been crazy. The bonds have been trading 56 or so cents on the dollar. They have dropped a little bit on this news today.
All right, Bloomberg's Creighton Harrison, thank you so much for giving us the latest. Creighton Harrison, of course, reporting for us from Mexico City, covering the Latin American region. And just to recap the headlines here, the Bolivian presidential palace was stormed in an apparent coup attempt. This is after an armored vehicle crashed into the building. We've seen, according to images broadcast on TV, local television, military personnel taking over the capital's main square. Luis Arce, the Bolivian president, saying on social media that some military units were conducting irregular operations. He had called for democracy to be respected. It's something that we'll definitely watch out for.
Yeah, it's interesting too. I was trying to look at the market moves there. I mean, we did see a drop in the currency a little bit earlier, though we should point out the markets there are closed, and the bond activity, a lot of volatility, though still thinly traded. But as Creighton said, I mean, the drop that we've seen on prices there already pretty dramatic.
All right, coming up, results from the Fed stress tests are due. We break it all down with Rajan Cohen of Sullivan and Cromwell. This is The Close on Bloomberg.
1 minute remaining.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on
10
Bloomberg.
seconds.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
So the Fed says banks passed the stress test, paving the way for higher payouts. So the Fed says that banks can announce capital return to plans Friday. And the Fed says all 31 banks could withstand hypothetical recession.
All right, the periodic stress test by the Federal Reserves of the largest U.S. banks, and the results are in, and all 31 banks in that test are said to have passed. 31 banks could withstand a hypothetical recession, passing grades out there all around here, as the Fed says banks can then move forward with announcing what investors really want to hear, and that's their plans to return capital back to investors. Let's get right to it here. Sonali Basak at the desk right now to help walk us through this. The main headline here is Fed saying the bank passes the stress test. We knew that was more or less going to happen here, but give us some more details here under the hood, because there's a lot more going on than just that headline number.
There certainly is, and one main point to be made here is, yes, they all passed, wee-hoo, but at the same time, you are seeing that the CET1 ratios would have a little bit more of a fall than you saw a year ago. What does that mean? It could also require a larger rise in the stress capital buffers for these firms. Remember, we don't hear about the bank capital payout plans until after Friday, but certainly depending on how much you saw a drop in their capital ratios based on these stress tests would determine that payout. There are some banks that were affected more materially than others in the stress test. Schwab, for example, the stress ratio dropped all the way down to 25.2, which is much more outsized than you saw some of the other banks that were tested. I would also point out something very interesting that would not talk to the numbers themselves, but in the exploratory results, you had the Fed testing market exposure and particularly hedge fund exposure.
Hedge fund exposure.
What would happen if the 5 largest hedge fund counterparties were to fail for these banks? And that's where you saw some really interesting commentary by the Federal Reserve. The idea that the banks themselves could lose a material amount of money in that regard, up to about $22 billion is what the Fed calculated. And they say it's less predictable. It could vary based on the shocks, but they're using this information from the market to better understand that counterparty risk. Remember, this is
that
something...
going to result in like higher capital requirements, or we just don't know yet?
You know, it's interesting. When they first kind of drew up Basel III, there was a lot of thinking about how the trading...
Basel III, what happened to that? Is that
Basel
still going
III
on?
Endgame. I'm very sorry to forget the word.
But which is like the worst Marvel movie ever made.
Exactly, and the banks believe so too, trust me. But you know, when you think about the trading counterparty risk that the banks are taking on here, and the fact that you had record levels of exposure in leverage for these hedge funds at the end of last year, and now the basis trade is coming back in full form as well, there are a lot of questions under the surface about how that might play out at the end of the day.
All right, Sonali, great wrap up here of the Fed's stress test, the results of the banks. They all passed, but of course there's a lot more beneath the surface there. Let's now bring in Rajan Cohen. He is senior chair at Sullivan and Cromwell. Of course, he has a hand in almost every big banking transaction and knows the bank story from the 2008 financial crisis very well. Raj, so good to see you.
Great to be with you.
Thank you for joining us. You know, we talk about these bank stress tests and how they are designed to allow the banks to pass. What are we really getting from these stress test results? Because it's not clear that the Federal Reserve or any of the regulators want these banks to fail. That would cause panic, right?
Well, I don't think that any bank, it would be obviously a bad thing if a bank failed. But I think there's an inherent value in these stress tests First of all, the Fed, just as we were talking about hedge funds, they focus on the risks. They make the banks focus on the risks. And I think the stress tests just inherently also make the banks focus on where their risks really are, not just sheer numbers, but it's numbers in relation to risk. So I've always thought of the numerous changes made by Dodd-Frank. Requiring stress tests was one of the most valuable.
Okay, and of course, as Shonali told us, we'll be finding out in greater detail on Friday just how much these banks are able to raise, return capital to shareholders in form of buybacks and dividends. In terms of figuring that part out, how does that mesh with what, of course, is going on in the industry with the banking executives pushing back against the capital rules requirements that so far have been proposed and not yet finalized?
Well, there is an absolute correlation between the two. You are right. I think the banks opposed simply at one level because the requirements were so sharply increased. The Fed estimated 16% on average. Others have been a bit higher, but an average obviously means some are higher and some are lower. So you're talking about banks which would have had increases of 20% or more in their capital requirements. So, you referred to it correctly as the end game. This is the game, however, which is at least into triple overtime because we've been waiting for so many years now for this to occur. And there's uncertainty as to what's going to happen, including process. Will there be a new rule or will there be a reproposal?
I am curious, though, too. I mean, as they sort of work through the Basel Endgame, and we know that there are some separate proposals that the Biden administration would like to see to come to fruition, assuming that he gets reelected. There's been a lot of questions as to whether the regulations and the focus just on traditional banks, traditional lenders, that is kind of missing sort of the bigger picture, which is that so much lending activity right now is done outside the purview of these 31, 32 banks. What can be done to make sure that, if not capital requirements, certainly oversight is increased in that area?
This is a great point because there is an enormous difference between bank-like regulation and zero. And so if it were my choice to make, the first thing I would be doing is getting the information. How can you even know what you're dealing with unless you know what the exposures are? Some of these institutions, like Apollo, for example, are very open and transparent about what they're doing. Others, not so much. And that would be the key. You need to know, the government needs to know what the exposures are.
Well, Shonali mentioned that this was the first time in these stress tests where they've actually sort of looked at hedge fund exposure and how that would affect the banks if 5 of the biggest ones were to go under. So I assume that's a start. At least it gives them some sense here of counterparty risk.
It does.
How much further, though, do you think it needs to go?
I think it needs to go where if you are a lender, let's just stay with that because that was your first and I think key point. If you are over, say, $100 billion or 50, pick your number, I would suggest reporting to the Treasury Department, which has oversight potentially over all financial institutions. Then we can go from there, but you can't regulate in a vacuum.
That's interesting. The Treasury Department has potentially oversight over everyone. Thank you, Raj. Really appreciate you joining us.
Great to be with you.
Rajan Cohen, Senior Chair at Sullivan and Cromwell on the bank's big stress tests conducted by the Federal Reserve. They all passed. All right, let's take a look at how markets closed on the day. A bit of a late rally here, pushing the indexes into the green. The S&P 500 finishing up about 0.2%. We did see the 10-year yield top 4.3% after yet another Treasury auction. Saw solid demand. Today was a $70 billion sale of 5-year notes. And Romain, we continue to see dollar strength and yen weakness. The yen at its weakest since 1986.
Yeah, the yen weakening as well. And I'm just going to put a couple other stocks.
decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Jolo, the fugitive Malaysian businessman set to forfeit more than $100 million in funds over his role in the 1MDB bribery and embezzlement scandal. The DOJ reaching a deal that includes recovering his assets, including a luxury Paris apartment and artwork by Monet and Warhol.
Into this? Yeah.
Why am I bringing who?
Yeah, Alicia Keys and Swiss Beats. What did they ever do to him?
He likes to hang out with celebrities. He also hung out with Leonardo DiCaprio because he financed the Wolf of Wall Street.
I'm surprised this is still going on. Every time his name or 1MDB comes up, I go, wow, this still hasn't been resolved.
He still faces criminal money laundering and bribery conspiracy charges in Brooklyn, so it's not done yet.
Oh, in Brooklyn.
It's like the Basel III endgame. It doesn't
Basel III endgame. It will never end. All right, I'm keeping an eye on Ken Griffin, of course, the billionaire hedge fund founder, and of course, a former Chicagoan, now, of course, a resident down there in South Florida. Not forgetting his Chicago roots, a $10 million gift that he's giving to Northwestern University Medical Center there, specifically on a fund research into esophagus diseases. How about that? Hard for me to pronounce here. But I should point out, as much, I love to rip him because, the way
he loves Chicago?
He loves Chicago, just kicking and screaming. But, we should point out, he gave a lot of money before he left. He continues to give a lot of money, and now his latest gift, $10 million to Northwestern Medicine.
Yeah, in total, he's given more than $650 million to institutions in Illinois. So not small change. All right. Third in the lineup is LeBron James Jr., also known as Bronny James. We are all waiting to see which NBA team will pick the son of the four-time MVP LeBron James at tonight's draft. The pros is you get Bronny, and you may get his dad, who has made clear it's his dream to play pro ball with his son before he retires. The cons are that Bronny is kind of an undersized guard. He doesn't have that great experience. He's got a documented health problem, and his shooting numbers may not be up to par.
Up to par? What was he average, like 4 points a game or something when he was at college?
Not up to par.
Okay, well, I mean, look, look, you know how this is going to work, Scarlett. He's going to end up with his father on the Lakers, most likely, right?
I don't know. We'll find out, because the conventional wisdom is that certainly the LA Lakers will draft him because LeBron James already plays for the team. But their agent, Rich Paul, says not so fast. Bloomberg Business of Sports reporter Randall Williams spoke with Rich Paul and has more. So what did Rich Paul say to you?
I think, first of all, Romaine is hilarious. But Rich Paul told me, one of the things that he's done is no two-way contracts. And a two-way contract basically limits the amount of playing time that a player in the second round, anybody who's signed to one of those, can get. It also limits your earnings. So he's saying, if you're going to draft Bronny, then it's going to be a fully guaranteed deal. And so that basically says, if you're going to draft him, he better play, or you better be I'd say committed to his development. And what better way to be committed to his development than play with his dad?
I mean, look, You would think so, right? I mean, I feel like that would be the best spot for him. I can't imagine him going anywhere else, and it seems like it would be there. But I also question sort of this idea as to how long this experiment is going to last. I mean, LeBron himself probably only has maybe a year or two left in him, I would think, right? I mean, not to, I don't know. You laugh.
We'll see. We'll see.
I know it's up to him, but the question is, like, what's the longer-term commitment to his son if he is drafted into the over?
Well, the thing is that the development is important because for someone selected in the second round, a lot of these players sometimes don't even make a roster. They go and experience the G League, and then sometimes they're cut. And so what Rich Paul is asking for a team is like, if you're going to select him, don't waste my time. If he's going to play. Let him play in the G League. Let him get an experience maybe on the 13, 14, 15 man on the team. And so, yes, the Lakers seem like an ideal fit. LeBron, J.J. Redick, Jeannie Buss, all these different people. But if a Dallas Maverick, who Rich Paul mentioned as well, are willing to put him in the G League and develop him, then maybe he can work his way into being a starter eventually someday. Who knows what his development looks like, because he's only 19.
He's only 19, which means he could still grow taller, right? I mean, he's 6'2" right now, which makes him kind of undersized for the NBA. But actually, you talk to people who say that that could work for him when it comes to marketing his brand.
For sure. I mean, one of the things that we're talking about with Bronny is he's inheriting his dad's brand in a sense. And so LeBron is a huge figure. Anybody who stood next to LeBron, he's a giant. Bronny is more of Romaine size, I'd say. And so with
Thanks, Randall.
But with that in mind, when you're thinking about kids and consumers, the reason Steph Curry had a boom was because people want to shoot like Steph Curry. They can see themselves in him. And obviously, I'm not sitting here trying to tell you that kids can be Steph Curry, because Steph Curry is the greatest shooter of all time. But when you're looking at Bronny, you can jump like him if you work hard enough. And so that's what people are saying. And, you know, with the relationship already established with Nike, he had an NIL deal there. Who knows? Maybe someday that if LeBron is the king, then Bronny is the prince.
Yeah. All right, Randall, you going down to the Barclays Center tonight to watch the draft?
No, I'll pass this
Just
time.
going to do it. All right, Randall Williams covers all things sports for us here at Bloomberg. That conversation continues right now. Earl Patton joining us right here on set. He headed up business development for the NBA in New York and Johannesburg, was also director of basketball operations for the Cleveland Cavs. Currently, he's managing partner over at Rumble Venture Capital. Earl, great to have you here. I had another question. My first question is, at 19, can you still continue growing? Is that really a thing?
Well, you know,
because Scarlett said that.
In basketball language, you look at a media guide, sometimes you're 6'4", sometimes you're 6'5", sometimes you're 6'6". So theoretically, you can keep growing.
I am curious. I mean, you've obviously got a lot of insights into how these teams works and the mindset. I mean, when you talk about a draft decision like this, and the Lakers have 2 picks, I think 17 and like 55 or something like that here, is that worth it? Like when you're talking to the executives there and they're having these conversations, is it worth taking a chance on someone like this to please who's still effectively your star player?
Okay, well, two things about it is that one thing that I think really gets overlooked is basketball IQ. The one thing Bronny's coming into the league with a heavy, strong basketball IQ, obviously learning from the best. But the way the game is now, you don't necessarily have to be the biggest of guards. And some players just transition better from a pro game. You know, there are a lot of college players that, you know, for whatever reason, they do better in a pro setting environment. And I think Bronny is going to have some success.
Bronny feels a little bit like a sidebar story. I mean, I know it's a big story for this draft, but part of it is because you don't have a difference maker like you did with Wemby last year. And so the big question will be, what do the Spurs do? They have 2 of the top 10 picks, and their decisions will determine how they build this foundation around Wemby. How do you see them playing that out?
Well, I see the overall draft, and I guess I'll put it in finance terms, like an exchange. And in that regard,
speaking our language.
Okay, so the minute Commissioner Silver steps up to the podium, that's the equivalent of the opening bell. Then you're going to have 30 teams that are acting as, let's say, trade desk, buying and selling and leveraging, you know, draft capital in a larger NBA economy, volatile market, and so forth. But this draft is pretty much going to set success for future drafts. So, you know, 2025 has a strong draft class, and I think a lot's going to go through Oklahoma City. Sam Presti has about 36 draft picks, and you're going to have to probably see Sam in order to get something done. So it's going to be one of those drafts where not necessarily a star player, but a lot of movement and a lot of activity.
If we're going to compare the draft to an exchange and companies like teams, then what kind of skills, what factors are the teams looking for? What's their skill that that's a underpriced commodity right now?
Well, I look at it in 2 ways. So the one thing winning and losing have in common, they're both expensive. So the thing is that you're going to have owners that say, hey, you know what? We're one or two pieces away, and that can be a wing player with a shot to open up the floor, or that can be an owner that says, you know what? We're paying a high threshold in salaries, and we're not getting winning. We're going to have to do a fire sale and a rebuild. And I think the Nets, with their trade actually yesterday, is going through that process. And you're going to have a lot of teams that are pretty much going to optimize, hey, where are we in terms of value? Because there is a correlation between winning and revenue. And being that these owners, these men and women, are titans in their respective industry, one thing they have in common, they hate losing because they didn't make their billions by being in last place. So I think there's going to be a lot of movement to regulate and level set the fortunes of their franchises moving forward.
I am curious that as the NBA grows, and particularly as they recruit new talent, I mean, with your venture, Rumble, you're doing a lot over there in Africa. Right. We've had a lot of new international players that have really kind of galvanized viewership. You know, something that David Stern did, of course, in looking into Asia and Europe, and now under Silver doing the same thing, but to maybe different parts of the world here. How important is that going to be to the NBA's future?
Well, look, the salaries are going up. It's being more expensive. You're going to have to
At 5 p.m. Eastern Time, we get South Korean manufacturing, BSI seasonally adjusted, prior 72.
The highest demographic in terms of youth population. And youth population like to consume sports. So it's still the, you know, it's the holy grail of content. And in order to move it across the world, Africa is going to play a significant role in that.
I want to ask you about the infrastructure around the teams and the games, because the NBA still has not formally announced the media rights deal with broadcasters and streamers. We know Comcast and Amazon are likely to get some of the games, but they would need to build their own pregame show and in-game show around it. There looks like there's going to be a talent war here for the broadcasters, right? Because J.J. Redick is going to coach the Lakers, and Charles Barkley says he's retiring.
Well, look, the broadcasters are making like starting NBA money. You know, the talent pool is getting richer and wealthier, but also there is a war for talent, and I think what's going to happen is that you're going to have the streamers battling for that. Obviously, the news hit where, you know, the TNT show with Kenny Smith and Shaq and Sir Charles is in jeopardy. And I think the fans are, you know, screaming out to say, wait a minute, you know, let's save that and salvage that first before we go into the evening streaming deals. But the NBA is, you know, going to do what the NBA does, look for the biggest partner that provides the most value, but not value just all in terms of dollars, value in terms of how they can disseminate more content and get in front of more eyeballs. And I think it's going to look different with the way people are consuming sports content now, where they're on mobile phones and so forth.
We only have about a minute, but you think that the new deal is still going to be spread out over multiple networks? So it's not like we're not going to the old days where we just turn on NBC or something like that. That's behind us.
It would be impossible. And we're just saying that just for, you know, you and I in New York. But if you're thinking about all over the world, you know, you're disseminating these rights throughout South America, Asia, Europe, and so forth. So it is going to spread.
All right. Well, Earl, it's great to have you on. And
thanks for having
me. This final year for Barkley is going to be amazing now that he's completely untethered by any contract obligations after that. Earl Patton.
Kenny Smith was surprised.
Kenny Smith's always surprised. Earl Patton, managing partner over at Rumble Venture Capital. Our thanks to him ahead of the big NBA draft taking place tonight, starting tonight, here in New York City. Stick around, though. We're not done. We're going to set you up for some of the big market-moving events over the next 24 hours. This is The Close on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because you know, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
At 5 p.m. Eastern Time, we get South Korean manufacturing BSI seasonally adjusted, prior 72.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
All right, let's set you up for what we're going to be watching tomorrow before the bell, earnings, Scarlett, this time from Walgreens.
Yeah, and of course, this is going to be really critical in terms of what they say about consumer spending. Obviously, they have the prescription business, but they really count on people to just buy things on their way to picking up their prescriptions.
Yeah, I don't know. That seems a little passive. We're also going to get some economic data tomorrow morning as well, starting at 8:30 a.m. Eastern Time.
Jobless claims, that's a weekly number for all of us keeping track of what's going on with the labor picture, but also the third and final read of the first quarter GDP number, which is expected to be upgraded to 1.4% growth.
Well, it might be interesting to see if we get an upgrade on the home sales side. We had new home sales today showing a lot of softness out there. We get pending home sales tomorrow at 10 a.m. Eastern Time.
Yeah, and that's been a big question of affordability continues to dog the home housing market, even though demand is very, very hot.
Yeah, we had a great conversation earlier with Robert Refkin over at Compass, and he actually sees some light at the end of the tunnel, but he also sees that tethered to rates coming down.
Absolutely.
But he thinks that could happen sometime by the end of the year. And
as does the entire market.
But he says that sweet spot right now is if you can get a average mortgage rate to about that 6% level, that would really open up the market. Also, earnings after the bell tomorrow, another read on consumer spending, this time on Nike.
Yeah, Nike, of course, has had its own issues, and it's been trying to streamline things and make it so they're not selling sneakers of every color and stripe in markets all over the world.
And then later that night, of course, we will have the first presidential debate of this U.S. election cycle. Full coverage right here on Bloomberg. We'll be back tomorrow.
You look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Seconds.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded
Still
at
waiting.
the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
The Supreme Court appears poised to allow abortions and medical emergencies in Idaho. According to an inadvertent posting briefly on its website, seen by Bloomberg. We'll have reaction this hour from Democratic Congressman Greg Landsman of Ohio.
Former Democratic Congresswoman Stephanie Murphy will also join us, the Democrat weighing in on the cases the court has yet to decide in this term, including the prosecution of January 6 defendants, along with Donald Trump's immunity.
This as Trump and Biden enter the final stretch of preparation before tomorrow's presidential debate. Our political panel helps set the stage. So, of course, we have a lot to look forward to tomorrow, Joe.
Yes, sir.
But we had a lot to dissect today.
Well, that's right. We didn't think we'd be talking about another Supreme Court ruling after we got two official rulings around 10 o'clock in the morning. We have a good sense of what another one may be, and we do start right there. Our top story, a Supreme Court decision accidentally or inadvertently, in the words of the court published online, before its planned release. Bloomberg Law obtaining a copy of the opinion in Moyle versus United States, showing that the court appears